Looks like I have viewers, but no one's chatting, so I don't know who's on. If you are on, say hi, say hello. I'm not going to spend much time on Bitcoin because I just think Bitcoin is stuck in a range, and it's not. It's very difficult to trade Bitcoin when it's stuck in a range like this. There might be one or two good trades, and that's it. Maybe if you're lucky. I had this trade planned from yesterday, and it didn't come into my level, which was the point of control, so I didn't take it. But if anyone was looking to short, you see, the idea was correct. The short idea was correct, to go up into higher volume nodes and to come back down. It's good to see that the price is moving in line with your ideas. Once you start seeing that, then it's all about fine-tuning the execution. But as long as you have an invalidation and you're patient, and then you use the correct risk management, which is never more than 1%, never, then you can just continuously take good trades and then see what happens. When you hit your targets, key levels of support or resistance, you take profit, and then you end up with risk-free trades. And that's basically how it's done. That's really how it's done. It's not anything more than that. I had a long from yesterday's stream. I deleted it, but I don't know if anyone remembered. But actually, look, it went down, and it would have worked too. That long would have worked. But the first thing to bear in mind when you are in a range like this is that there's no expectation to leave the value area. Don't expect that. That's not expected behavior. We don't expect to go through value area highs and value area lows just like that. The expected behavior when a price is range bound is to go from top to bottom to top to bottom of the range. That's the expected behavior. Now, if that's what's expected, then you trade the range, because that's the highest probability trade. But it's always difficult to trade when the price is in the middle of the range. You have to look for price reversals at the extremes of ranges. So we're range bound in this range within a range. We're in a range within a range. And that's usually how the price is going to move on any chart, on any token. And it's usually going to be within a range. And then if you take it further up in terms of time frame, what you'll find is that we're usually within another range. usually we're always in a range. It's very unoccasional where we're actually outside of a range, and we're usually, when we're outside of a range, we're traveling between ranges. That's usually what happens. So whenever you get expansive moves like this, then actually what the price is trying to do is trying to leave one range to get back in, to get into another range. It's always like that. It's only when you're in price discovery at the all-time highs, where no previous prices have ever been printed, that the price could really expand quite far without forming ranges. But even still, it does eventually create a range. It's always trying to create a range, and that's always to do with people taking profit at certain levels, and then other people coming back into the market to who haven't entered, etc. It's always like that. So I think with Bitcoin right now, looking at the candles on the daily time frame, I mean, there's a few good things in terms of bullishness. Let me just hide the rest of these. So I want to get these fixed ranges and keep those horizontal rays. Keep those two. I think we're still within the monthly wick high. So if you can imagine these two lines, that's the wick of the previous previous month. And underneath the wick, you have the body of the month candle. And this is a month candle. And I think we're at the moment, we're at the lower part of the previous month candle inside of the wick. So I still think we're kind of there. And it does look like the price is trying to make higher lows. See, this low is higher than there, and this is higher. And we are forming market structure within the wick of this daily, the bottom of this daily candle, the bottom part. And then the price has reversed this candle here, 2 days. And it's actually, if you look at it in more depth, you'll see that the price has closed above the wick. Yet it has closed underneath this wick. You see how the price closed above this wick, but underneath this wick. If yesterday the price closed above there, that would have been quite a strong close compared to this, where it actually closed underneath the previous day high, which is that wick there. And so naturally the price is looking to reverse first. But this is quite nice. Like, I mean, it's not a bad formation here. And then obviously you have a daily level here. That's a liquidity level. So I imagine there's going to be orders. And the way it works is this. So you want to place orders. And I'm going to talk about this later in the stream about TRVL. But when you want to place orders, you're basically, as the price goes up, you're looking to place orders lower down. And so on the time frame that you're looking at the previous red candles. As the price goes up, you're looking at the previous red candles. As you're going down, you're looking at the previous green candles to place sell orders. So as the price is going up, if you're looking to buy, you're placing buy orders at previous red candles. So if the price is up here, you look down in the path of the price and you're looking for the red candle. This is the red candle. This one here. That's the red candle. And so what you will do is, as the price is going up, you'll place your orders on at different, you'll ladder it onto this red candle. And eventually what happens, the price will come down like it has in this this green candle. It'll fill orders until it reaches a point where there's a change in the balance between buyers and sellers, and then the price will come back up. And so what happens is, at the moment when you look at this red candle, you see how this wick has come down. Effectively what's happened is it's cleared the order books all the way down to here on this red candle. So from here all the way down, I can't draw it because of there, it's been cleared because of the way the wick has come down into this red candle. So at the moment you wouldn't put orders back above that level that the wick has come back down. So because all of those, the order book's been cleared, because the price has come down, cleared the order book, and it's gone back up. So the next set of orders which haven't been cleared are below that wick down to the bottom of this red candle. That's the area of untapped liquidity that lies on this red candle. So when the price does go back down, as soon as it goes past this wick, it will start hitting orders. And not only that, because of the bottom of the wick, you're also going to get liquidations too, because of at the bottom of top of wicks, that's where people put their liquidation areas, their stop orders. So there's quite a lot of liquidity at the bottom of this daily candle into that daily level. And the strongest amount of orders, the most amount of orders are going to be where the candle turns and squares off at the bottom. So you have this red daily close, and then you have this green daily open. And so you end up with a level there, which is referred to as the daily level. And that is where you will place your orders to buy. And then in reverse, as you go up in price, you look back in the history of the candles to see where the orders are. And then you'll look at these green candles, and that's where you start to place your sell orders. So at the moment, this is your order block, this green candle here, this whole green candle to sell. And so that's what happens with the price. The price will go up, fill orders up into this green candle, and come back down into red candles, fill orders as it hits the red candles until it gets a change in the balance, and it will just keep on doing that. Yeah, that's usually how the price behaves. So are there any trades? Well, yeah, I mean, I think there are trades. You have to trade the range. I think the safest trade right now would be a swing failure of the previous daily low into the daily order block. Probably the safest trade, because you're trading with orders. That's where you're expecting big orders. Here, underneath this wick, this is where the orders are going to be. But the thing is, you don't know how many orders they're going to be. We don't know. We don't know how many orders. And because we don't know how many orders, you wouldn't just place orders unless you're going to do a spot buy for the duration of the bull market and you don't care about the price. You wouldn't just blindly put orders there. That doesn't make any sense. The reason why you don't do that is because what if there aren't enough orders to hold the price and the price just goes down? You don't want to be in that position, unless again you're accumulating for the duration of the whole cycle. So in terms of trading, what you would do is you wait for a reaction. And this is I had this when I first started to learn about trading. I had this difficulty. I was saying, what is a reaction? Well, a reaction is where the price goes into a specific area and it goes the other way almost immediately. So you see this 1 hour wick, you see how the price went down and it came back up, and there's a wick. That's a reaction. Yeah, when you see this red candle where the price goes down and there's a wick, that's a reaction. And sometimes they're like very significant, and sometimes they're very short. So if you see the price goes above these highs, it forms a wick, that's a reaction. You could trade that. And even though sometimes the reaction causes bigger moves, and sometimes it causes smaller moves, and sometimes you get a reaction and then you get another reaction. You see how that wick was taken, and then that one was taken too. So these are all reactions at certain key levels where the price is reacting. Yeah. And then what isn't a reaction is where a price will just go through a certain level and you don't see that kind of behavior where the price returns, where it continues and it doesn't look like it's getting a reaction from that level that you're interested in. So let's say you're interested in a level underneath this wick where this untapped bit of candle is remaining. Then obviously you have the wick, and the wick is obviously going to be the best place to see if that there's a reaction, because it's an easy place. Hold on a second. I'm back. Sorry. Oh, hold on. David wants me to do something. Oh, there you are. How do I do that, David? Right click you. Oh, how's that? Did that work? It says only one viewer, huh? I definitely need to get another screen. I'm gonna get it because I can have it and see what's going on. So yeah, so what you want to do is you want to go with the crowd. You want to buy when everyone else is buying, and you're looking for reactions of certain levels. And generally speaking, when it comes to trading, you want as much strength as possible at key levels which correspond, and that's called confluence. And so coming into some sort of order block when you know there's going to be limit orders, that's one level of confluence that you're looking for. It's one. Usually you're looking for three. Usually you're looking for three, and the more the better, because then you have lower chances of the trade going the wrong way. There aren't three here. I can't see three, but I mean, obviously you have to do all kinds of technical analysis to see if you can find levels of confluence, and that's why you have all of these tools to see if you can create levels of confluence using technical analysis. And eventually you can, if you find areas of interest where there are three levels or more, and then when the price comes into that area and it reacts, then you can take the trade. And so, I mean, I don't know if there's three here or not, but just for the sake of argument, that's going to be a swing failure pattern. So that's the entry. And then what you would do is, well, you have an order block, we know that, so that would be one, and then you can mark that out. You could mark out the order block like that. That's your zone. And then potentially you're looking for others, and so maybe you would do a volume range to see what the volume is like. So you have price levels and you have volume levels, and you see the volume level is actually higher, so that's not confluence because they're not on the same area. They have to be in the same area to form confluence. So actually the volume level is much higher, and when the volume level is higher, it can, what happens with the price is that it could form support off the volume level and not go down, right? Or it could go through the volume level, get into your order block, swing failure, but then when it comes back up, the volume level actually acts as resistance now. That's what could happen. So, you know, these levels, when they're not corresponding with each other, when they're not confluenced, then you can get behavior that doesn't necessarily work in your advantage when it comes to taking trades. And so surely you can scalp and take trades, but then you have to really look at taking profits very quickly. And I think in this circumstance, I would take a scalp. I wouldn't necessarily take, just because it's basically you're trading off one level, off one reaction. I can't see any other levels. Nothing comes to mind. The other thing you might want to do potentially is from this pivot low to this pivot high, you would see if there's a fib level and you see it's all kind of mismatched. It's nothing's really in massive alignment. You could do a full fib. So yeah, so in this lower level, you have the 786, much lower. But if your entry is the swing failure of this previous low, you're going to catch the 786. You're not going to catch 786. You're going to come in much higher. And so again, you have the same problem where the price could go through. You get a reaction of the 786, but then forms resistance off this level here, or it'll go up, but they won't go up enough. It'll come into the back of this golden pocket area, and you won't have the space to take the SFP and take profit, because actually it's not, it's only finding resistance because it's lost the golden pocket. Golden pocket most of the time, like probably 99.9% of the time, will act as some sort of resistance or support area. That's why it's so important. It is a 618. It's not, you know, the 66 isn't a fib ratio. It's just the 618. But the reason why people use 66 or 65, it doesn't really matter. 618 is the level. 66 isn't a level. 618 is the level. It's the fib level. But the reason why people have an area is because the price usually always overextends, and it just gives you an idea of how the price can move, and so it can move back. It's like a pocket. And so when you're in the pocket, you're not thinking to yourself, we've lost the 618 yet, because oftentimes if the price is looking to continue through the golden pocket, often what you'll experience with the price is it will go through the 618, it'll come underneath the pocket, and then it won't get back up to the 618. It'll kind of back test the pocket, not the 618. And then you can see, okay, well, the pocket's actually holding is an SR flip and not necessarily the 618. And then usually what will happen is if the price isn't going down, what you'll get with the price, what you'll notice is that actually it'll come back into the pocket first, and the pocket hasn't held as resistance as it lost the pocket, and it gives you a better idea of how the price is behaving around that area. And so usually with these like confluence levels, they are areas, they're not usually exact lines. Hold on a second. Sorry about that. You know, when my phone calls, I have to answer. Life goes on. So I don't know if there's a trade here. I can't really tell you there's a trade. I think you could take that swing failure. I probably would, and I'd probably scalp that. And I think it would be a scalp. And if it reverses and it continues going up, then you're still in. And you trade the top of the range. And I think you just expect the price to trade within this range until it figures itself out. And obviously I was still looking to short the top of the range. So maybe another swing failure off the top. Maybe you just try and trade the swing failures off the tops and the bottoms of Bitcoin, but just be very wary that you're looking to scalp every single one. You're not looking to hold the position for long. And the way it works just so people understand how taking profit works, if you do take a swing failure of this low here, of this swing failure wick here, and so the way to do it, and I will always repeat my explanations, and I'm not going to apologize for that, because I feel that there's a lot of people who are tuning in and they don't know. And even if you've heard it before, it's always good to be reminded about how this works. Because when I first started learning, people used to talk about swing failures and no one really explained what it was. And it was really frustrating because for months people were talking about swing failure patterns. It's like, and no one really explained what it was. So a swing failure is this: you have a pivot, and a pivot will be like a wick in the low or the high. Yeah. So we have, let's just say this is our trade plan for the sake of example. And let's say you have a short trade plan as well here. So your idea is a swing failure of this wick here and this wick here, right? That's your idea. You're looking to short the top and long the bottom. You don't set limit orders because, for the reason that I said before, the reason why you don't set limit orders is because you don't know if the price is going to react or not. If the price comes into your level and just goes through it and you've set a limit order, either you'll be stopped out immediately, or if you haven't got a stop limit or a stop market, whatever, you're going to be crazy underwater immediately, and you don't want to be in that position. So you never preempt the price. You always wait for the reaction. You always wait for the reaction. You never preempt the price. You never say, just because there's like 5 million levels here and the confidence is like off the charts, higher time frame, this X, Y, and Z, that you're going to set limits. Because for the reasons that you don't know, the price can always ignore all of that and keep on going. And you don't want to be that person who was long and then the whole market was shorting and you pay them off for your stupidity. And I've done that. Everyone's done that. Everyone's made that mistake. That's how you learn. You make those mistakes and you realize that every single time that you do it, it doesn't work. And the times that you never do it, you think, damn, I should have just done it. And so you never get it right. So always wait for the reaction. Like I said, the reaction is this would be a reaction. I'll show you. So the price is going down, like it does. It goes underneath your level. This is your level. And it comes back up your level. And you want to see a little bit of volume there too. You can't ignore the volume. Okay. You don't want to see some kind of low volume. The more the volume as it crosses your level, the better. And as the price comes back above your level, as the price is moving back above your level, in that move, it's not going to take a long time. It's going to be quite quick. As the price is coming back, that's the failure. That's the swing failure. And then you mark it long. You have to mark it because the price is moving away from you. As the price is coming up, you won't get a position if you don't mark it long into that. Yeah, it'd be very difficult. It might be possible with smaller orders, but you still, by the time you get filled, it'll probably be cheaper to market long, because obviously market orders, you have to pay the takers. The people who set limits are the ones who get paid. The ones who take market orders, they pay for the orders, so you're paying market fees. But it's probably going to be cheaper because you'll end up, the minute that you want to do it, you'll end up getting a better position. So for the time of the price flies away from you and you've managed to get a limit order, if it's even possible, depending on the speed of the way the price reverses, it's probably better to get a market order in that circumstance. And so you probably won't get the exact price that you're looking for, but probably somewhere higher. But that's a reaction. So you're looking for the reactions to go down and come back above that level. And you only look to take the market order as the price comes back above the level. Only as the price is coming back above your level. That's the idea. And then the invalidation is that low that you've just made, the actual low, and it could just be a single wick, because the expectation after you've gone into a swing failure and you've come back up is up. It's not down. You're not expecting this now. So if it does this and it takes the low again, then you're invalidated. Now, this is how you take a swing failure, right? For up or down, for the tops or the bottoms, it makes no difference. Just, there's only one thing to be aware of, okay? And you have to be aware of this, okay? Even if you take a swing failure, the market could also, the market could so this is the problem. So the price comes up and you're in a position now, you're in a long, and then the price still reverses, it still goes down. And then what happens is it swing failures the swing failure, and it still goes up. And this can happen, and it can happen once, twice, and sometimes 3 times, and it's still correct. You're still correct. The idea is correct. Yeah. And sometimes it does it once, sometimes it does it twice, and sometimes it does it for the 3rd time. So when you're taking these kind of fast trades with a swing failure, you have to be aware of that. And usually what happens, with the first swing failure, the first time it swing failures a level, the people who you'll be in profit very quickly, usually what happens is those people will take their profit very quickly too. And what they will do is you take enough profit. So you have to calculate your profit. You take enough profit so that if the price does go down and stop you out, that you've still made money, that you're still won that trade. So you have to calculate how much profit that's going to be, and it may be 90%, you know, it may be whatever. You have to see, because it depends on how far the price will bounce. That's how you take your profit, because if the price goes up and you're in profit and you don't take profit and it swing failures you again, which it can, not only you stopped out at a loss, your trade idea was actually right, because it may do that, it may do this. So you have to bear that in mind. And the market loves to punish people who are early, and the market loves to punish people who are late. And so usually early longs get punished, and late longs get punished. And so that's why you're always taking profit, just in case you're one of those people. You just don't know. And sometimes this would just go up and you never needed to take profit, but you're just averting the risk. That's what you're doing. Now, if you take profit, you can still get back in, because you sometimes, or a lot of the time, what will happen is you can draw a Fibonacci retracement, and the price will come back into the golden pocket, the local golden pocket. And if you've taken profit, and then if you see a reaction, then you can put the profit back in. You can compound the profit, or you can just take a new trade, and then your validation will still be the same, taking the entry there, but you're still then only looking for a reaction. There are different ways of doing this, but that would be the best case scenario, where the price reacts and it gives you one chance to get in on a swing failure, and then there's also another chance to get in because usually it'll back test the neckline to continue going up. So there are like multiple chances of getting in on a reversal at a key level where there is a swing failure. So it's not like, if I don't get this, I'm out, I can't get in. There'll be many chances to get in, but you just have to plan the attempts so that you know that you're getting in on a reaction at the right level of interest, but you're still technically trying to trade that swing failure idea, which will lead into a reversal. Exactly the same for longs and for shorts. There's no real difference, except usually shorts probably get punished more for some reason, but then they're more profitable, because if the price moves away in the downwards direction, then it moves much faster. So I mean, if you took a swing failure here, it's effectively the same idea. As the price goes up, you wait for the reaction. The reaction is for the price to go down. You take a market short, and that's your invalidation above that high that you've created. No, you wouldn't risk any more than that. You wouldn't go further. You wouldn't say, well, just in case, I'll go further. That's not how it works. That has to be, your invalidation is the high that you've made, because the idea is that that's the high. This is it. If the price does come back, you're not expecting it to come back above that high. And again, the same thing applies. If the price does come up, it could stop you out and still do the same thing. So you still have to have the same mentality. You still have to take enough profit so that if you're punished, you still make profit because you've already taken most of your profit. And then if it does swing failure again, you can enter again and you can take profit again. And then if you see it comes into like the golden pocket, the local golden pocket somewhere, then you can enter again and you still have that top invalidation. And then you're entering with the compounded amount from the profits that you've taken, and it becomes a very profitable trade idea, assuming that it is going down. Now obviously if it's not going down, you have to gauge the strength of the price. And I think the way to gauge the strength, or the weakness rather, of the price is, in the first instance, it's going to be some sort of market structure change on the lowest levels, like on the 1 minute level, the 5 minute level. So also having an understanding of market structure will help determine whether you stay in the trade for a longer period or not. It's not that easy. If it was easy, we'd all be making money and then we'd all be rich. You see, after this shorted, you had a higher low, higher high. You only really confirmed the market structure change after all of this move down until it took this level here. As soon as it took that level, it made a lower high. People were looking to short because they saw the weakness in the structure. The structure had just made a lower low, and so therefore they were looking to short that. Give me 1 more second. Sorry. Hi, sorry about that. So yeah, so I think that's Bitcoin. I don't really think there's many trades, to be honest with you. I can't really see significant confluence for a trade. I might be tempted to take those SFPs and it would literally be a scalp and nothing more. And I think maybe I'd be more interested in a I would be more interested if we took this. I think this taking this low would interest me more, or going up higher would interest me more. And maybe I don't. I think it's really nice to be able to catch trades in the golden pocket areas. I think that's really nice. All right, I'm going to check my chat to see if anyone's chatting. Oh, you're in blue. See, I don't know why, but my chat doesn't appear on my phone. Can't see it. It's really annoying. Oh, now I see the chat. Oh, Alpa UKE, are you still on? And then Latif Saeed Mohammadi Imam. And you see on this this studio, it says concurrent viewers 1, likes 2. I don't understand this. I don't know if there's a lag or something. It doesn't actually tell you how many viewers there are. So I don't know. Right. I can see the chat now. So in case anyone's on. Right. I think we're done with Bitcoin. Let's look at prop S. Don't know if anyone is interested in this, but prop S is a RWA, and what they're doing is they're tokenizing. I think they're tokenizing hotels in Asia. So it's a real world asset tokenization. So I'm quite interested in what they're doing. They had a new token launch. I've got some drawings, but I'm going to get rid of all of them. So it's good to do this. You have all these drawings and analysis. You just get rid of all of them, start over afresh, and then reanalyze everything from afresh. It's always it's good practice to do that. I've got this alert as well. Oh, I'll leave that, it's fine. So yeah, prop based, they're listed on Max. They use the chain that they're using is, I think it's Atmos or something. Prop base. What does it say? Some pancake. Some, they're going to be launched soon on another exchange. I think BitMet or something like that. BitMEX or something like that. How to buy. They've got a really active community. Their Twitter is really nice. I like their website. They've got an active roadmap, although they should update it. Their tokenomics is pretty standard, the same as most of these kind of startups. Nothing, I'm not like overly overwhelmed, but you know, it is what it is. I think it's Atmos. These are the guys. Does it say? Aptos. Is it Aptos? It's Aptos. Aptos, yeah. No. That's it. That's the chain. So they're on this chain. I've never really heard of this chain. I should probably chart their chart just to see what it's like. So they were launched on November the 23rd on Mexi, and yeah, just have a look at the chart. Look, it's looking quite, I don't know. Let's have a look. So the first thing you do with these kinds of charts is you'll definitely do like some kind of volume pool to see where the volume's coming in, and check the settings. Let me increase the row size to see if we can get a little bit more accurate data on the volume. And so what you have to be thinking is like, this is a low market cap token. I'll check the market cap now, just so we can all have an idea of what we're dealing with right now. Is that right? 5.2. It's not right. What's that? 5.2. That's wrong. Let's see what you got to try and make sure you find the right one. There must be two at Zila. There's two prop S's. You've got to be careful when you're when you're charting and you're looking for data to pick the right one. Total supply 1.2 billion, 132,000 trading volume. That's basically mostly on MEXC. This is fully diluted, but we don't know what the circulating supply is. It says all-time high 413. Yeah, that looks right. All-time low 1.5 cents. Why does it say 1.5 cents? Because it's basically the launch price. So it's reporting the launch price as the all-time low. The Twitter is really active, so I like their Twitter. Definitely worth having a look at these guys. I'd like to see their market cap. That's what I was really looking for. Not find it. Let's try the other one. Okay. See if we can find the market cap data. Prop base. There's a few competing like projects like this. Prop base, prop chain, Rio. They're all kind of similar, and there's probably a bunch of more. So I've gone straight to TRVL, of course. Prop base. Look at. See, look, self-reported circulating supply, so 180 million. So a lot of the supply is locked up in some kind of vesting schedule. So that's, I think that is like when you looking at this as a long hold, you probably wouldn't consider this an extremely long hold, just simply because you know that your value is going to be diluted significantly in the future. And so if you own, let's just say for the sake of argument, you have $1,000 worth of prop S now, if the circulating supply, if you have the full amount of total supply released into the circulating supply, then your value is going to be diluted like 5x. Good morning, Craig Shot Gaming. I was looking at your Halo videos yesterday on your Twitter. I used to play Halo a lot when it was on the first Xbox. It was fun. It was a long time ago. So so you got to be careful when a token is reporting a high total supply and a smaller circulating supply, and then you have to see how that investing schedule is going to play out. I still can't see a market. Oh, there's the market cap. So the market cap is 6.18 million. So it's quite a small market cap token, which is good. That's kind of what you want. So if you're thinking about an expansion in the bull market, a token like this could do really well, because to get from 6 million to 60 million is very easy in crypto, especially when the hype train comes in down the line, especially when they start releasing kind of different aspects of their project. There's a lot of money flowing and rotating around crypto at the moment. And so when you're looking at these tokens and you're seeing a good team, some good kind of marketing and like future news items, exchange launches, etc., then it's very easy to imagine a 6 million turning to a 60 million in a relatively short space of time. Like, it wouldn't be very difficult. And that's kind of how you can look at the crypto market. So if you find certain projects like this and you think, well, it wouldn't be a bad idea to accumulate some, because for sure on the back of Bitcoin, a lot of these smaller coins, tokens in this kind of new area, which is real world tokenization, real world asset tokenization, there's no reason why they're not going to do well. But it might take some time to accumulate. And so we're going through accumulation periods. Now, looking at the charts, we're kind of above the value area right now. I see that there's a high volume node down here as well. So that's a level of interest. So when I look at levels of interest, I'm looking at price levels of interest, and then volume levels of interest, and then fib levels of interest. So there's different levels of interests that I'm looking at, and all of that is on the higher time frames, the daily and above, the monthly, the weeklies, and then obviously if there's enough data, the 6 monthly or even the yearly. So when you have a new coin like this, you don't have significant amounts of price levels, so then you have to go for like volume levels. And what I get from this, and it'd be good for people to understand, when you have a token launch like this, all of the initial investors came in at token launch price. That's how it works. So if the token launch price, according to this, is like 1/10 of a cent, 1/15 of a cent, then with whatever value that they have, they're already in healthy profits based on their initial token, their token bags, based on their initial investment. So you can already imagine that a lot of these people, the original investors, are already in at healthy profits. If the price now is currently trading at 3.6 cents, then they're already at 22x on their original investment. So if someone initially invested $1,000, their portfolio on Prop S is at $22,000, the portfolio. Yeah. So you have to bear that in mind. And with the initial launch, you can see that there's quite a high volume node here. So what that tells you is that a portion of tokens were sold and bought at this level. Yeah. And you can actually see on the second day, the price came back down, found support on that high volume node and went up. So basically what that's saying is on day one, a portion of token was sold and then it was bought on day one. And that was at about a sixth of a cent. Does that make sense? Hold on a second. Sorry. People don't know that I'm streaming and they're just disturbing me. The life of trying to stream. I need to escape and turn my phone off. Back in 2 minutes.
Hey, Amir, can you hear me?
Hi, that worked. Okay, no, I just better to be safe than sorry. So what should I do? So I send that using Binance, and then I'll send you my ETH wallet. Is that all right? Yeah, the same amount. But not to the same wallet. Can you send it to my Bybit? Ah, yeah. Okay, I'll do that now. All right, all right. Bye, bye. I didn't realize it wasn't on mute. This, my mute button doesn't work. Anyway, all right. Where were I? How many viewers have got? 4 viewers. People are like, what's going on? This guy's going on for ages. I just want to hear about TRVL. All right, let me just quickly finish this. So yes, you got to be careful because people took profit, people bought, and you still have a large amount of people in profit right now. And the reason why I know that is because you see the volume, it's gradually declining. You see that? And this is what you want to see. You actually want to see a significant profit take before, like, this is what I'm thinking. I'm thinking I want to see profit taken before I enter. So we had a little bit of a profit take at the beginning, but at the moment I know that a lot of people are sitting in a lot of healthy profits. Now, I don't know what that means. I don't know if they're hodling for the duration of the whole bull market. I don't know if they're just looking for a little bit higher, and then as soon as like Bitcoin starts running or something, they're just gonna close their positions and put it into, like, I don't know these things. We did no one knows. And so actually what I'm thinking to myself is, with something like this, I mean, sure, for the reasons that I don't know, this could just keep on going up, and I'm never going to be able to catch it. Yeah. And I'm willing to take that risk because I'm not willing to buy in the highs. Yeah. And what I really want to see when I approach a token like this is for the people who are hodling to be tested, to see how much determination they have to hodl and not sell, and also to see how much interest there are at those lower prices. Yeah, to see if there are enough people looking to accumulate this token at the lower prices. So I want to see two things. I want to see a test. I want to see tests. I want to see how people react to the price going down. Yeah, because there's a lot of people in healthy profits. Are they just going to dump their tokens the minute the price comes down? That's what usually happens. Usually what happens is, as the price comes down, people become bearish, and as the price goes up, people become bullish. And what usually happens is that people become really bullish in the highs and really bearish in the lows. And so in the highs, they become so bullish that they don't take the profits, which we're seeing now. And in the lows, they become very bearish and they start taking heavy profits. And then you start seeing volume increases. And then you want to see how the price reacts to the increase of volume at the lows, to see if that price is being held up or if it's actually in free fall, because there's not enough interest at the lows. And so there are some things that you have to look at the charts, and it's about psychology, really. It's about market psychology, to see how people behave at the highs and at the lows, and then to see how the price and the volume corresponds to the behavior, and to see if that's in accordance with your expectations or different from what you're expecting. And I don't think we've had a real test, and so I would want to wait for that test. If I miss wave one, if, let's just say for the sake of argument, this is wave one. If this is a wave, and this is wave one, yeah, and it's going to make all-time highs, it's going to go up stupid X, I'm okay with that, because I'm not going to enter before I start seeing some significant take profits. And what I really want to see is the sellers exhausted before I enter. That's what I really want to see. I want to see the sellers exit the market. I want to see everyone who wants to sell before I enter, because then I know that there's no more sellers, or the sellers are really depleted. And that's when you want to enter. That's when you're looking to accumulate. Yeah. So even though it looks nice, like it looks very bullish, because we're above this all-time high here, we're above the value area high here. That's the whole range value area. So that's quite bullish. This is actually quite bullish. The thing that I really want to see is an increase in volume. I want to start seeing the price go up with an increase in volume, and I'm not seeing that. Yeah. So already what I'm starting to see is a bearish divergence between price and volume. Yeah. It's just something to bear in mind when you're looking at these things. Yeah. When the price goes up, you want to see an increase in volume. It doesn't have to be crazy, but you want to see an increase. And the reason why you want to see an increase in volume is because you want to see that people who are taking profits and the price is still going up. That's the increase in volume. So if people are taking profits as the price is going up, and the price is still going up because there's volume to push the price up, what I'm seeing now is people aren't taking profits. And so that automatically makes me not enter the market and just be patient about the price, and to see what the price does. Yeah. And so even if the price was to go up and then you saw a significant take profit, and then the price started to come down on decreasing volume and found support here again, that would be a much better entry than to enter here. Because at least now, the people who wanted to take profit have taken profit. And then you see the price is only coming back to the same area to find support, which is better than an area which is not tested yet in the highs. And you don't want to buy in the highs. You want to buy on a back test of support. So in my mind, entering after seeing this kind of price behavior here is going to be infinitely better than just entering here, even though I'm bullish on this project. Like, I'm super bullish on this project, actually. Small market cap, real world assets, they're pioneering a whole new space. They have a bit of competition, but there's no reason why the whole RWA doesn't do well in this bull market, and it's becoming the latest craze. Real world tokenization, real world assets. So you never know, we'll see what happens, but in the future, not far in the future, this might be the next NFT craze, and that's what I'm hoping for, expecting. Who knows, you know, that's what I'm thinking. So automatically right now you can see, and I'm only explaining to how I'm analyzing it, and I hope it helps people who are watching to understand how to analyze other tokens. When the price goes up, you want to see an increase in volume. It's just a fact. When you have a launch like this, you want to see significant take profits at the highs, not the lows. Yeah. So you can see there's that increase in volume here. Okay, so that was a good reversal sign. Someone took profit there. You see, people get bearish at the lows. They take their profits there and the price reverses. Anyway, that's by the by. So even though I think there's a good trade to be had, and I'll show you what it is, and this in my mind would be a trade. It's a fib. You're looking at a fib extension into the golden pocket, and I'm looking at this order block here. There's a daily order block here. You can't see it because I've hidden it. There. So there's a level there. It's a daily level. And it's a weekly level. So it's a weekly level and a daily level. The problem now is that when I was first looking at this trade idea, the price hadn't gone up so high. And when I was looking at this trade before, I was thinking to myself, maybe the price is just at the all-time high, just near the all-time high. It hadn't gone up so much. And then the golden pocket would land on the point of control. And actually now what I'm seeing is that the golden pocket is above the point of control. So even though you've got confluence slightly above you, I think the thing that I'm thinking is if the price actually comes back down, loses the value area, and starts changing market structure to go down on the lower time frames, then I don't see any reason why we don't go back to the point of control, because now you're clearly back in the range. And once you're back in the range, what the price tends to do is first go back to the point of control. And then if there's not enough support at the point of control, it will try to get back to the value area low. That's how the price usually behaves when the price is moving from the value area high to the value area low. And I don't see any reason why it should arbitrarily stop at a golden pocket and not hit the point of control for it to be so close. You know, it isn't very far from the golden pocket. It's only another 12%. Why would the price not move another 12% just to get to the point of control? I would wait for that 12%, you know. That would be my I wouldn't just prematurely jump in just because it's a golden pocket and a daily level. when the point of control is literally an inch away. And so then, so this changes things a little bit for me when I'm looking at this. So maybe then if the price does manage to get back down, maybe what you will see is some kind of behavior like this. And then down. I don't know how this is going to play out. So I'm just making this up. And I'm not estimating the time frames either. I'm just doing this for the sake of demonstration and an example. Yeah, so I think if the price comes back down, you want to get it to the point of control, and that would be a good trade. And then if you're going to go into the point of control, actually what you really want to do then it's always, if it goes here, then what else? Then you actually really want to do is take the liquidity underneath this wick low. That's what you really want to do. What you want to do is wick down past the point of control, take the liquidity there, and then you have a nice SFP entry, and probably then the strength will come in and the price will come back above the point of control. You might get that kind of behavior. And so for me, like looking at this now, a nice trade potentially would be that SFP. Probably, I'm thinking that's what I'm looking at. And I wouldn't be like overly bullish of this just because you are going back into the point of control. If for some reason it goes down into the swing failure and it just doesn't get past the point of control, then you have to basically reevaluate and maybe exit at break even or a little bit of profit, just because that's not what you want to see. You want to see if the price is losing the point of control quickly to not offer resistance on the way back up, you know? So it'd be very different to the behavior where you experience price like form some kind of long consolidation area before it lost it. Then it might come back up and resist it to continue, you know, like you have to be careful about that. But I think what I'm looking for is this, just for people to get really bearish as the price comes down and to swing failure this low. But I mean, otherwise, forget about this midpoint. Why not take these lows at the bottom? Why not get people really bearish and get a really nice entry at the value area low after we've cleared these levels here? Like, that would be nicer if that was to happen. That'd be really nice. Who wouldn't be interested in that? I still think this is going up though. That's the problem. So I almost think that maybe this is still going up a little bit. Like, this would make more sense to me if it went up to about 6.2 cents, because then that value area low would fall on the 382 and this high volume node would fall on the 618. Because at the moment, at the current high, then they're not really positioned correctly, and usually the fibs do fall on significant areas of interest. Usually they do. They don't just land in the middle of blank space. So what that tells me is maybe this is going higher, maybe up to about, and I think that might correspond with this this exchange launch. So I think they have an exchange launch soon, and so it is possible that what we're about to experience with this exchange launch is a pump up to go down. So that would be, you'd have to take profit on the exchange launch. So if you were to start accumulating now, so maybe what we're experiencing now is a little bit of a accumulation range at the highs for the price to pump in an exchange launch, and then we're going to start seeing some significant take profits from people who've accumulated in this range and maybe even in the lower ranges, which isn't really a range, it's just this candle. I think you want to see that happen first to see how high it goes, and then I'll be looking for an entry lower down on some kind of significant retrace. And I actually honestly like just looking at this chart now. I think I would love to come here. Wouldn't that be amazing if we could get the price back down here? That's kind of what I really want to see, actually, looking at this token now. This kind of behavior. And it may or may not come. And obviously for it to come, to create this kind of behavior, what you're looking for is oh, what did I do wrong? Yeah. What you're looking for are significant levels in this higher range to be lost. So that would be the first significant sign of weakness. Probably the token launch on that new exchange, big take profits. I'd like to see take profits on the way down. People taking profit, lose this value area low and come down here. And actually I'd like to see a little bit of ranging here as well. And maybe then what you would get is some kind of different value area where the point of control, which is currently here, finally moves down here and it forms the correct floor for this token. And I think this would make more sense for me for a longer term accumulation to go up. But you know, this is like, this may never happen. I don't know if this is ever going to happen. I think there's a lot of people who are bullish on this project. Will they allow the price to come down? And that's what I want to see. I want to see a test. I want to see where the actual levels of interests are. I want to see the volume increases at the lows so that I can see, okay, now this is where there's some significant buying. And therefore, when I'm buying, it's not just me. I'm buying with others. And so I haven't seen that yet. So it's something to just bear in mind when you're looking at these tokens, to try and understand the psychology of when people are buying, how people are buying, when people are taking profit. And the volume basically gives you a lot of information. I don't like this volume profile right now. And then if you were to look at like other indicators, which will help you identify potential divergences, then they might be telling you the same story. So let me have a look. Get rid of all this shit. Yeah, don't need any of it because I can see. So yeah, so you see on the CCI, which is the one that I use, I can see that there's bearish divergences forming. Hasn't played out yet, but it's forming. And so basically the way you can tell potentially is that if there's a divergence, I'll explain. So what you're seeing on something like the CCI or the RSI is that you're seeing the price move on the CCI, and you're also seeing the price move on the price chart. And when there's no divergence, they kind of do this, they kind of move in the same fashion, you know, they kind of move in the same fashion, they kind of do the same thing, they look the same, you see. And when you get a divergence is when they look differently. And so as that price goes up, this came down to go up and make a higher high, and this didn't do that. So you automatically had a little bit of a bearish divergence there because the price is going up, but the CCI isn't going up past that high. So they look differently. So there's some divergences there. But now you're getting a bit of, you see, we're getting bullish divergences. The CCI now is giving you bullish divergences. Why? Because the CCI is going down and making new lows, and the price isn't. Price is making higher lows. So this is telling you that there's a little bit of bearish divergence and there's a little bit of bullish divergence. Yeah. And the bullish divergence is happening now. So this kind of gives me the idea that maybe there's a little bit of bullishness here, potentially to go up, but you'll still end up with a bearish divergence because you'll make new highs on the price, but you won't make new highs on the CCI. Yeah. And that's how you can see divergences. They shouldn't diverge. They should look the same. So yeah, so I think it's quite bullish now, but I think it's basically leading up to this token, this exchange launch. I think it's BitGet or BitMEX or something like that. So you can go onto their Twitter and have a look. And I think what's going to happen, and I guess I want to see this happen, is I want to see that token to launch, and then I want to see some take profits. And it's a shame that the take profits are going to be at the highs, but I mean, I just want to see it happen, you know. It's a shame that we haven't seen take profits along this whole consolidation range. We're not really seeing that, but I just want to start seeing some take profits, and then I just want to start seeing the lows tested, and then hopefully we'll get a little bit of weakness and we can accumulate down there somewhere. That's my idea for prop base, and we just have to keep an eye on it and see. All right, so Marve, sorry, I haven't really been looking at this. Is it lagging? Because this, why am I getting drop frames? That's really weird. It says there's drop frames, so tell me if the stream is good or bad. I don't know why it's dropping frames. It's really annoying. Anyway, let me know. Marve says it's been almost a week since last big volume drop on crypto. So around 4 many coins could be in the green again on multiple positions. Hi Maxine. Hello, nice little pump yesterday on TRVL. Good. All right. So you're saying the stream is still good. All right. Let's go back to TRVL then. That's what we're starting to talk about. So I hope that was a little bit of information about prop S. It's always good to kind of refresh ourselves. And let me look at KuCoin because I've cleared all my data on my charts on KuCoin are clear again. So there's I've just got this line. Yeah, I mean, what can I say? There's not really more to say, is there? I mean, it's not looking terrible. I think a lot of people are what I'm seeing now is that this is what I was seeing. I was seeing that in this consolidation range there's a lot of nervous people. Because even though I was saying this is great, this is great, this is great, I don't know if people trusted me or believed me. You know, that's fine. And I think now that the volume is coming to break this consolidation range, I think people are a little bit relieved. Because obviously if the price starts to go down in an illiquid environment, it's very difficult to exit. And I think that maybe that was what was on a lot of people's minds. Like you're accumulating positions, bags, and it's going to be very difficult to exit because the volume doesn't match. It doesn't match the amount of volume that you're collecting. And so I think there's a lot of people somewhat relieved right now because we are seeing an increasing volume, but I mean, we still want to see increases in volume. It's not enough to just get one push up. We need an increase. And so obviously part of the reasons why I'm making these videos on a regular basis, daily basis, is so that in the future when people go on YouTube and they search for Dtravel and TRVL, they go, oh my god, wow, there's this guy and he's giving us all the info. Technically, because what I've learned is, or what I've noticed is that a lot of people have no idea about technical analysis. So I don't mind doing the work for them if that's what they want, and then if they get a little bit of education along the way and it gives them a little bit more confidence of areas of interests where they can accumulate, then it's even better. So, and then what I was thinking to myself was, how cool would it be, you know, if of all the coins you have Bitcoin and Ethereum and Link and all these other ones, XRP, and then you have TRVL there as well, with like people charting it and posting their YouTube videos, and have this thriving charting community on TRVL. So I'm just kind of like trying to start that off, and I have and I think it's going okay. But obviously what we want is continuation. We don't just want this to be a one-off. We want to see continuation. Let's see how this weekly ends. I think it would be nice, obviously, like the most bullish weekly close is going to be above the weekly high, but what I've seen with a lot of tokens is that even if you close above it slightly, that's quite bearish still, because you don't just want it to close, you want it to hold. Yeah, and that's effectively what you're trying to do. It's like these previous weekly highs. You don't just want it to close, you want it to hold. It's like these highs, you want it to hold above these highs. You don't just want it to close. And so if you get like a clean close without a wick above, that's not great, because the next candle is most likely going to be a red candle, and it's going to be the take profit candle. If you see wicks above in the candle itself, that usually means the take profit is within the remit of the candle. But if you see short wicks like this and long bodies like that, then usually the next candle is this red candle is the take profit candle. And unless there's enough interest for continuation, then people will start to take more profit, and then more profit, and then eventually it's just continuous take profits. Yeah. And so ideally what you want to see is, like, obviously this was on a downtrend, but you see how this wick went up. So most of the take profit was within that wick. So the price was still able to go up. But obviously what happened was that more people took profit. So you had a double take profit. So actually that second amount of take profit didn't look as healthy as it could have. What you really needed on the second candle, after you got an expansive move with a take profit, is you wanted the candle to close above the previous wick. And so that's kind of what I'm thinking here, to see what happens. Like, if we do go above this level, I want to see a take profit, and I want to see the candle close above the wick. I think that would be healthy, because you know the people have taken profit, and obviously the longer the better. And if it closes above that level, then what usually will happen in that circumstance is that the wick will fill. So you can have a continuation. So we have to see how that plays out and how far that happens, if that happens. And I think obviously what you want to see is increases in volume. And so What I'm seeing on the lower time frames now isn't bad, because as you can see, the green volume as it goes up is increasing, and the red volume as it's coming down doesn't look like it's increasing. It's hard to tell, but you see these red candles, the levels are decreasing as the price comes down. This was quite healthy because as the price is going up, you got increasing levels of green volume. And so ideally, that's what you want to see overall. You want to see, as the price goes up, increasing volume, as the price comes down, decreasing volume. So we just have to see how this plays out. And I think it's consolidating. That's what's happening. I can't really, that's what it's doing. It's just correcting. And you see on KuCoin now, the price is now above the volume point of control of this range from when it broke up to where we are now. So we have to see now, we have to see if this holds. Do we go up to the value area high now and start filling this area with volume? And you know, in time, what happens is that point of control, as it offers support, the price will go up and it'll create more volume at higher levels, and then you're getting more and more acceptance at the higher prices. So the longer the price is now going to be consolidating, and this isn't really long enough, like don't think this is a long time, this is actually a very short time, but the longer the price consolidates at 4 cents or 4.5 cents, the more that price is going to be accepted as the correct price for people who are looking to accumulate. Yeah, obviously when the price was last week trading at 3 cents and now we're at 4.4, people are gonna be, oh my god, it's like 25% more expensive. They're gonna be like, shall I wait? Maybe I'm gonna wait. I'm gonna wait for lower. And as the longer it continues that the price doesn't come back down, then people who are looking to accumulate will start to accumulate at the higher prices. And that's just the way it works in terms of the psychological factor. Broken Wild Riff says, from the first time I saw you, I believed in you. Well, I'm just telling you what the charts are saying. I'm not like, thank you, but this isn't about belief, it's just the charts. So yeah, so we just have to like look at this and see how this plays out, and I think it's looking quite good. And just be aware that Bitcoin can change everything, right? So right now we're looking at Bitcoin going nowhere, range bound, it's going sideways. And that's part of the reason why there's a little bit of interest in kind of low cap tokens, because that's where people are going to be able to make more money, more gains. The great thing about this consolidation range in the last month is that when Bitcoin at certain times looked sketchy, the price held on TRVL. That was a really good indication of strength. It's the reverse. It wasn't weakness, it was strength. Yeah. And while people were looking to trade coins that were pumping after Bitcoin recovered, the fact that I said this in the previous videos, the fact that we aren't going down is better than pumping when Bitcoin recovers. Yeah, because the last thing that people want to see is the value of their investments go down or go into the negative. The people don't want to see that. I'd rather it doesn't do that than to suddenly one day wake up and have crazy gains. And so ultimately going up, you know, going up slowly is much healthier for the price. But like I said, or I have said many times, the 5 waves that I'm expecting are impulsive. The 3 of the 5 waves are impulsive. The 1, the 3, and the 5 are impulsive. And you can't, we want to see impulse. Don't think that we don't want to see impulse just because we think that it's healthier to go up slowly. Yeah. The whole point of this is the impulsiveness. And so eventually what happens with the impulse is that at the highs, people get more FOMO and they push the price up. And that's when the volume comes in. That's actually healthy for the price because it takes the price further and further and further. And eventually, maybe, you know, we can get to our much higher targets later on in the year or next year, the beginning of next year. It's possible. It's very possible. And we just have to see what happens. And at the moment, when you look at the weekly time frame, I haven't seen anything, any crazy expansion, you know. And I think it would be nice to get that, to get like a really crazy expansion with really high volume. I think that's going to put a lot of people at ease when they see that, because then they're going to be significantly up in their portfolios, and with the increase in volume, they're going to have they're not going to be necessarily looking to exit, you know. They're going to say, well, this is quite healthy and move up, I can continue holding. I think that's what everyone, and that's going to require impulse. That's not going to be slow accumulation. We are accumulating, but ultimately that's what we want to see. We want to see impulsiveness. And so let's just see what happens to that. And, you know, we just take it one day. I mean, I'm not selling. I'm not, like, even if, this is the thing, like, even if the price was to just go sideways, I'm not looking to exit. And just simply because of the fundamentals of the project, the context of Bitcoin and the bull market, and also the highlight reel hasn't been released yet, you know. We're still waiting for the tokenomics document. We still haven't received that yet, and I haven't put pressure on them because I know they're, like, I've chatted to Cynthia and Eric. I know they're busy. This is their priority. They're not like sitting on the couch watching TV. Cynthia doesn't even watch TV. So, you know, she listens to podcasts and reads books, and the rest of it is on Dtravel. These people are working flat out on Dtravel. Like, Eric is 100% full-time at Dtravel. They all are. So I know they're working really hard. So we could just be patient and wait and let them do their stuff. Because a lot of things haven't been released yet, we're just waiting. And just, you know, it's just a good opportunity to accumulate at the lows. Eventually, 9 cents will be the low. And with the increase in volume, I don't really conceive that the price will come back below 9 cents, simply because it was the launch price. And anyone who got in the initial offering came in at 9 cents. So in my mind, because that was the fair value at the beginning, that once we cross that, then I don't necessarily think that it should come back below 9 cents, because then people will look at the charts, they'll look at the project, they'll see that 9 cents was the launch price, and then in people's minds they'll be like, well, I'm coming in at the launch price, that's great, it's like I'm coming in on day one. That's what people will imagine in their minds. So if we are in the future at 20 cents or 21 cents, and then when there's some kind of pullback or corrective move, then when it does come back to 9 cents, then people who are looking to enter aren't going to go, oh my God, I missed out because the price was once upon a time at 2 cents or 1.9. They'll go, well, actually, I'm just getting in as though it was the 21st of November. And in all of that time, most of the work, the hard work has been done. You know, it's very different to coming in on day one when nothing had been done. So it was the idea that they came in on that. Whereas now you'd be coming in after significant corrections, and then you're coming in at 9 cents. It'd be a very good price to come in to the project as at after all of that, everything that had happened. So I don't necessarily think that we're ever going to get past below 9 cents. But obviously, I'm just like telling you what I think about the psychology. Anything could happen. And now ultimately, you know, we mean, you know, like I'm not saying 9 cents, we may not even come back to 9 cents. Who knows? You just don't know. You just don't know how bullish people are going to get. And we don't know at what price people are going to prevent the price from dropping back to. I think a much more bullish situation, like the higher we go and the higher we defend, the more bullish it is. Yeah. So the ADA path that I described yesterday was this. This was ADA. To go up into the back of this channel and to come back to 9 cents. ADA did that. So that's kind of why I'm just going on that template. And you have this kind of higher time frame inverse head and shoulders idea as well, which maybe people will see, and people see these patterns on the highest time frames and they trade them. So maybe we do need a inverse head and shoulders for an injection of volume as we cross this point here. That being said, obviously if you go higher it's more bullish. It's obviously if you defend higher you're more bullish. If that was to happen, that would be really bullish, because you've reclaimed some significant levels. You've cleared liquidity into the higher highs. It's much more bullish. And so I'm not saying this is going to happen, but let's just say for the sake of argument this was to happen. That was your wave 5. So we had let's just say we had our wave 3 with that kind of wick up to 9 cents already, and then you could just do a fib extension, a trend paced fib extension from there to there. Oh no, what am I doing? Hold on, sorry, my bad. Let me do it again. From the 0 to the 1 to the 2. The 0 is down here. So the 0 is from the spring to wherever this 1 ends. So this next 5 is going to be the end of 1 to the higher time frame 2. Obviously there's going to be an ABC corrective move to the 2, and what you end up with on the trend based fib extension are higher targets. That's what you end up with. And so then with that kind of explosion, increasing volume, never forget the volume, then your 618 is already at $2.3. Your 1-to-1 is at $10. It becomes really bullish. Yeah, that kind of move to end with 1, and then that kind of 2 to end here would be extremely bullish. So we have to, and that's how you would do it. That's how you would. So in my mind, an ADA move, an ADA path up into this channel, down into 9 cents with this trend based fib from the 0 to the 1 to the 2. The 1-to-1 would put you at just under $1. The 1.618 would put you at $4. That's kind of where I've got my free now, up into that top part of the channel. Yeah. So even this is quite bullish. Yeah, I'm not saying this is bullish. I would take this. I'm not going to say no to this. Who would? Like, look, you're going from 4 cents, 4.5 cents to $4. I'm not going to take a no. I'm going to say yes, I take that. So but this is how you do it. And obviously, I've shown you guys about the fib time. And have I got it on this chart? Yeah, I do. For me, this is like so amazing. I'm so amazed by the fib time. And obviously I've been tracking this token for a while. And you only really see this stuff afterwards. You don't really see this stuff when it's happening. It's just always the way, you know, like hindsight gives you clear vision. From the initial all-time high to the first all-time low to the first pump rally, and then the 618 landed perfectly on the all-time low. So I am actually in anticipation of the 18th of March, that week. That fib time is a range. It's not like a minute. It's like a week, like within that range. And it could be a little bit earlier, it could be a little bit after. It's like a little bit of a range. So I am in an anticipation of to see where the price is there. And, you know, and if that might be, I don't know if that's going to be the peak of our move. I don't know. I mean, I'm just interested to see how it plays out. But based on fib time, and it would look right, because these are all distances which work out in symmetry. It's all symmetry, you know. You can imagine it like that. And obviously the next fib time after that is sometime in November, at the end of this year. And in between, we just don't know what's going to happen. I don't know, and I don't know, but I don't know if we go up. That's our wave 1 complete. And then our corrective wave 2 takes us all the way till November, like a long consolidation. And actually what I'm thinking, and you just have to be prepared for this. And so I don't know, because I think a lot of people will see other coins run, and maybe even Bitcoin will run, and they may have the idea of chasing the pumps, and that's fine. You know, if people are going to do that, they're going to do that. You can't really change that behavior. But I think when it comes to consolidation, there's different kinds of consolidation, and I think the healthiest for consolidation are the flat ones. So if you look at this, if this was the one of the one, and you can't really know when it's happening, and this was the ABC, this consolidation, which was the C, is the most bullish one, the flats. This was quite deep, and this could have zigzagged down. This could have gone down to form an ABC like that. And if that had done that, we may not be up here. We may not have gone up to 9. Yeah. And so these ones are the ones that will give people the confidence to accumulate. But they're sometimes quite long, these flat ones. And so we have to see how this, when we do finally hit L1, and I hope it's not as fast as this move up, because I don't think that was pleasant for a lot of people. But you know, it'd be nice if we get like a, see, I've got the 2 coming down here. I don't know. I mean, maybe I mean, with ADA, it did happen. The 2 and then the 3 was when Bitcoin was rallying. So I don't know if that's going to pan out. But, you know, maybe this actually is like this, is more like this, like a long flat consolidation. And obviously the most bullish one in my mind could be potentially something like, I don't know, I'm just making this up. if we do hold this higher, this one here, and if it is a repeat of this, then it could be like up down there and then a flat like that, just to hold, you know, it could be like that. If it's the same as this, see, down, up, and then flat, we have to just see how that, this is just one shape of how it could look. So we just have to see, but these flat ones are really nice. I like the flat ones, and usually the flat ones are a bit longer. And obviously then you have deep ones, which are corrective, but that would also work too, because then you're just looking for some kind of corrective ABC to go up. Hi B, how's it going? Yeah. So in terms of, like, I don't want to go on too long about this, but the idea that I shared before about the bull run was continuous buying. And I think this, I don't know if that's, if people are familiar with that idea, because when the price is going down, if you buy, you're always underwater. And you may end up with an average position eventually quite low when the price reverses, but no one really knows when the price is going to reverse, and no one really knows how far the price is going to go down. No one could have predicted how far this was going to turn. This could have continued all the way down, and so that's why it's very difficult to just buy against the trend. It's always better to go with the trend. But now that the price is looking to turn, I think people should be less, like, not so fast with trying to take significant profits, because if this is a trend reversal, then this trend, if I showed you the pitchfork that I drew before, is it on this chart or is it on the other chart? No, it's on the other one. It's on my gate chart. There, and I'll get rid of the rest. This is just an idea. I don't know if this is going to play out, right? And so if you wanted to draw that for yourselves, it would be from the first significant all-time low to the first high in that rally to the all-time low. And I've probably done it on the 3-day chart because the pivots don't look so, or maybe even the weekly chart. I can adjust it to the 3-day so we get more accurate points. Doesn't really matter. It's all a kind of, these lines are always range. They're kind of zones less than, you know. So I mean, if you can imagine the trajectory of the price as described by this pitchfork, then you are buying. You're not really selling. Why would you sell into that trajectory if that's the trajectory of the price? If we do start to kind of make our way, you know, somewhere up and down in this pitchfork, then by the time you sell, you've got nothing. You're out. You've literally got zero at the end. You keep on selling. So ultimately, what you will be doing is you're looking to sell to buy back in, to compound, because in the same way that we had this extended downtrend, we could now have an extended uptrend, and that's the change in behavior that we're looking for now in this token. And initially, that change in behavior is going to be evident by the turning of the moving averages, the higher time frame moving averages. So as you can see right now, we are just above the 3-day 200 simple moving average. Has that ever happened before? No, look, it's never happened before. This is the first time in the token's history. If you can imagine, when the token launched, this moving average didn't even exist, but you can see it was probably much higher if it did exist. And this is the first time we've actually been able to potentially well, we got above it in that candle, but look at where we are. So what we're in the process of experiencing is the turning of the moving averages on the higher time frames. And obviously on the daily time frame, I've shown before that we've had a golden cross. We had a golden cross before here, so this is the second time we've had it, but the circumstances are very different now, and that indicates the turning of the tide. The momentum is shifting from a downtrend to an uptrend, and what we really want to start seeing is all of the time frames to fall in line with that idea. So the next time frame, I mean, you could, you know, every time frame has a time frame. So you got the 2-day time frame. Sure, the 2-day time frame, it's about to happen. Then you have the 3-day time. Like, I use all the time frames, but most people use 1, 3, and week. So let's just go based on what most people use. And then obviously the week is, we don't have a 200 average yet. But what's interesting about the weekly time frame is we're now above the weekly 50 simple moving average for the first time. That is really fantastic to see. That's like really amazing to see, because once we clear this moving average in terms of price and we hold it as support, I don't think many people expect the price to come back underneath it for the duration of the bull market again. And if the price does come back to the moving average and the price is going up and it comes back down, then obviously forget about this pitchfork. But you would expect the moving average to offer support in some meaningful way. So then that brings me down to, how do you accumulate during a bull run? Because I'm suggesting that people buy. And so I think there are different ways of doing this. And I think the easiest way will be simply to pick a time frame as we move up, and to, when these red candles close, you accumulate. You only buy the red candles. Now, some people don't want to look at the charts on a daily basis, and that's fine. Then you could just focus on the weekly red candles, and you may not be buying as frequently, but then you might take bigger chunks out of the price. So you may go, the next time I see a red weekly candle, I'm just going to buy 100,000 TRVL, bam, on the close. Yeah. And that, you could approach it like that. And I don't know how many red candles we see, but at the very least, if you buy red candles, then you're buying after the sellers have sold. You don't want to buy before the sellers sell. You want to buy after the sellers sell. You want to buy when there are set people are still selling. Basically, that's what I'm saying. You want to buy once they've stopped. So a good strategy would be just to focus on a specific time frame that suits your life and allocate your positioning based on the frequency of the candles. And then when you see a red candle on the close, that's when you would buy. You'd keep on scaling on the red candles. And as I've described before, you can actually skim profit from the green candles. So if you don't have the spare capital, then over time you could skim from the green candles with a view of putting it back into the red candles. Now, you can't be greedy when you approach it like that, because, you know, and I'll explain why, because you may end up buying higher. That's my point. if we're going to get like a green candle and then a green candle and a green candle, like 3 in a row, and you've skimmed some from the top of each candle, yeah, you're skimming profits. So your overall position is reducing in terms of TRVL, but obviously increasing in terms of USD value. And then imagine that we now consolidate, but the consolidation is a really flat consolidation. So we've made 3 weekly green candles, 1, 2, 3, and then we have a flat consolidation of 3 red weeks, whatever. So you've skimmed from these candles, you're actually putting the value back in higher up. Yeah. So in terms of TRVL value, you're still less, but the idea is still correct, because what you're doing is you're buying after the sellers have exhausted. You're accumulating back in, you're putting the money back in after the sellers have diminished. And even though you can't be greedy when you act that way, because it's just playing it safe, because you don't know how the red candles are going to correct. You don't know if we get 3 green candles going up, we don't know if the next 3 candles are going to be all the way down here. You just don't know the future. We don't know how this is going to play out, how corrective these candles are going to be. You won't know if a candle ends up higher or lower than your position. The most important thing in this kind of technique is consistency. The consistency in terms of the value that you extract and then put back in, and consistency in the approach. So if your approach is to take a little bit from the green candles and put it back in on the red candles, you have to make sure that the time frame is consistent, the amount is consistent, and it's consistent in the execution. Does that make sense? And that is one way to approach the bull market, the expansiveness of the price. Yeah, it's a very easy way to approach it. You can't be greedy, because you're not trading. You just have a really systematic way of, okay, it's a green candle, it's a good time to skim. Oh, it's a red candle, it's a good time to put it back in. And even if it doesn't work in your advantage in the long run, you're actually helping the token in the long run. You're helping if everyone behaves that way, then everyone is helping each other. It's like a collaborative effort to defend the price as the price comes down, and then you always have capital to put in because you are skimming from the top, so that the volume that goes up is healthy too. It's not a low. We don't want to see a low volume rise. So in that respect, it's always good to take profit with a view to putting it back in, compounding it back in. That's one approach. Another approach which could work for certain people is, did I lose my I lost my simple moving average? Oh, it's because it's on the other chart. So if I actually lost it. It's weird I lost my simple moving average. Why did it do that? It's so annoying. Let me put it back in. 50. I want it to be yellow. Don't know why, but I like the 50 to be yellow. What you could do is you could just wait for the price to come back to the 50 moving average. And it doesn't have to be the 50. A lot of people have their preferred moving average. It doesn't really matter. And I think the 50 is, for me, the 50 is a good one because it's nice and slow, and I just like it. I like it because in Forex it works quite well, and I don't know why, but you can use any moving average really. But ultimately what you're doing is you're waiting for the price to come back to that moving average. So at the moment on the daily time frame, it's amazing, but when you look at it in hindsight, you look at this, expansive push up. Look how it came. You see how it's already offered. I mean, it's almost like it hasn't touched, but you see that and that. You see how the 50 is actually offering support. See, one, this is twice. So when you see that kind of behavior, and then when you see in the past how the 50 did offer support, it did offer resistance, it did offer resistance, it's now offering support. Yeah, it's just a very easy way to enter without too much thinking, without too much thought. Yeah, and you could just wait every time the price comes back to the 50 moving average to keep on adding. Yeah, now the daily is obviously it's starting to offer support, but I don't know how I can't predict the future. I don't know when the price is going to come back to the 50 again. I obviously don't want it to come back anytime soon because I want the momentum to pick up. And so I know in other trading groups they use another moving average, and I'm going to just add it now to see how that fares. And it's the EMA 12. So let me just add that. I haven't added it in a long time, but this is the first time I'm actually looking at it. I'll put it up as like some kind of step line so we can see that it's different. So on the daily, it's hard to tell. So let's go to a lower time frame. Yeah, I can't tell you if it's good or not. It's a hard one. So it's actually quite interesting. So looking at previous price action, look at this downward move. The EMA 12 clearly offers resistance here and here. Potentially also here. And then when the price does get back above the EMA 12, it does offer support here until it loses support, and then it basically kind of holds the price down, kind of. So now we're back above it. And when you look at this is the weekly time frame. When you look at this, you can see that it is offering support in some way. It is looking like it is. Now, I don't know if it's the EMA 12. It could be other factors. It could be other moving averages. It could be other ideas. But they seem to coincide sometimes. And that's what's interesting about certain moving averages. Obviously, on the 3-day, it looks like it did once and then it didn't until it did again. Until it didn't, until it did again. You know, like it's hard to... There's no rule for this. So it's just an idea. And usually with the EMA, like the EMA 12 or something like that, it's not really to buy, it's almost to sell, it's almost to take profit. So what I know that certain people, what they do is that when they get a loss, when they lose the EMA 12, like there, then they'll take their profit when it comes back to it the first time. So they use it as a take profit. So they might use a combination of an EMA to take profit and a higher time frame SMA to add back in. Now, everyone has a different strategy, and I don't have the answer, but there are different ways of doing this. And then the other way that could potentially work for certain people would be the Bollinger Bands as well. And so kind of what you're looking for is to skim profit when it goes into the outer regions, when it crosses the top, and then you're putting it back in on the middle. So your midpoint is where you're trying to get it back in. So as it extends beyond the band, that's like overpriced. and then when it comes back to the band, you're trying to get it back in. I think the most important thing you do is that you determine your own idea of what you want to do and be very consistent in how you do it. But it's the same for all of us. What we're all trying to do is to try to compound. We're trying to take profit, to put it back in and defend the lows. And I think the more and more I do videos, I'm just going to keep on repeating that idea, just quite simply because new people will come and they have to hear it, you know, because I don't think a lot of people know what to do and how to do it. The other thing that I think is not a bad idea, especially when you're forming ranges like this, are the volume ranges. So what I do is I draw from the candle that enters the volume, the new range. I'll use this tool, the fixed range volume profile, from that first candle to the current price. And then what you can do quite simply is trade the range. So you're looking to skim at the top, which is this top blue line, and then you're looking to put it back on the lower part, or the point of control. And ultimately, what you're hoping for over time are higher lows, higher lows, higher lows, to get the squeeze to go up. Yeah. So at the moment, we're not really, but we haven't ranged enough to be able to determine what's happening. And this is usually what happens after some kind of explosion. The price needs to settle, it needs to figure itself out. It needs to form some sort of range. And then we can start seeing if anything is forming in the price to determine what could happen later on. I think quite simply the way you should approach it maybe is, well, look, yesterday's close was really nice. It was slightly increasing volume on the previous day. The red candles were decreasing volume, which is what you want to see. And you saw an inverse hammer, this red inverse hammer in the lows, which is a reversal candle in the lows. An inverse hammer in the lows is a reversal candle. So that's kind of what you want to see. This whole structure is the beginning of a reversal structure, but you would need another green candle for confirmation, right? So we have to see if that happens, but that would be nice to see. And obviously this daily close yesterday, closing above this wick and also above this previous candle open here, is what you want to see. That's a good sign for a bullish reversal. Obviously, if the candle had closed, potentially if it had closed above that wick, it would have been better. You have to bear that in mind. But it closed above the open, so it was good enough. And what usually happens, which is what I'm seeing now, is that the price is trying to come back and test this wick here, which is normal candle behavior. It's very normal for an expansion for the price to come back to back test something in the price. And that usually corresponds to volume gaps. So when the price comes up, it's because the price gaps over certain levels because there's no volume. And so let me see how much this candle volume was. It was quite a heavy candle. Look at that, 459,000. That's a pretty decent handle. And we have a bit of a profit take there. That's a 269,000. And this is quite a nice candle. This is the beginning of a reversal, but you have to see, so like the confirmation would be another green candle. So we have to see how that plays out. But you kind of want a back test. And so when you have an expansion like that, this is your expansion. And if I use bars, so you can see. Then I can do this volume pool on these 3 candles, and you can see that there are gaps. I mean, it's very hard to see, but there are gaps. There's like low volume on the way up. There's a little bit of volume here, a little bit of volume here, a little bit of volume here, and then some significant gaps. And so what you'll get with the price is when you form gaps in the volume, the price will try to fill those gaps. It's just the way the price behaves. The market doesn't like gaps in volume and price. And so when you get this candle to come back down, what it's actually trying to do is it's trying to fill all of the gaps, and it's trying to get all the way back down to this red candle here. That's what it's trying to do. It's trying to come all the way back down to continue. Yeah. And depending on how many limit orders there are and how many sellers there are and where they're looking to sell to, etc., will depend where the price comes to. But here you see it looks like it's trying to get, potentially the top of this candle is offering support, potentially, or maybe this candle here is offering support at the moment, maybe. So naturally, a good way to enter the market when you see this kind of behavior would be the bottom of wicks, and then to take profits at the top of wicks. So that's also an idea that you can have in mind, and you just have to find a method for yourself which you're comfortable with, and just keep it consistent. But you see how here the price comes underneath these wicks. So people are like, when shall I enter? When shall I enter? Well, the price comes underneath this wick, this wick, this wick, and then this finally holds. But naturally, when you're looking at the price, where was the best entry? The best entry was at the bottom of the wicks. So that's also something to bear in mind. If you're looking to enter, the bottom of the wicks are pretty good. And the top. The bottom and the top of wicks are really good. And David and I, we kind of like developing a trade, just a really simple trade, where when you do see market buys, and I was explaining this yesterday to B, when you do see market buys, how do you see a market buy? I'll give you an example. So like all of these candles, these with these wicks on top, they're market buys. These are market buys. And so people are just buying on market, and then you get these wicks. And then when you see these market buys, what you often get is for the price to fill the wick. So we had, like, you see this green candle here. That's like a market buy. It's like I'm bought on market. The price, I bought all the way up to 5.4. Excuse me. But the price closed back down at 4.2. But what you end up with is the market to trying to fill the wick. And so the price goes up to try and fill the wick. You have to bear that in mind. And it works on every time frame. So now that we're looking at the weekly time frame, surprise, surprise, we're trying to fill the wick. This is quite a long wick. It goes all the way up to 9.2 cents, but the price is trying to fill the wick. That's the first thing the price tries to do, is to fill the wicks. And that's just a common behavior on all charts. And so here in the past, if you look at this market sell, the price, what it did is it actually went down, it filled the wick, and then it started to come back up again. And then you had this market buy here, and naturally the price went up and it filled the wick before it came back down. So when you understand how the price is behaving, then it can help you to determine where and when you're going to be looking to skim and to re-add. And the wicks are quite a good indication of how to do that, because the price is always trying to fill the wicks. It's always trying to. So that's just something else to kind of think about. And then the other thing that I wanted to like describe is like people are saying to me, maybe, where can I put orders, like limit orders, like forget about them. And as I was describing earlier when I was talking about Bitcoin, as the price creates candles, you're also creating future order blocks. They're called order blocks. And basically order blocks are good places to put your limit orders, right? And every time frame has order blocks, and obviously the higher the time frame you choose, the more powerful they're going to be in terms of the strength that they give you. And then the other thing to consider is, as time passes, the stronger they become, as long as they're not reached. Yeah. So I'll give you an example. So like on the weekly time frame, yeah, we had this red candle created here. Yeah. And then the price reversed to go up with these three green candles. Right. So this red candle that formed before the price reverse has now become our weekly order block. The whole of the red candle from the tip to the toe, from the top of the wick to the bottom of the wick, is your order block. Yeah. So if you can imagine the price here, I'm putting it on the edge of my screen so you can imagine that there's no future price, and we're in the week of the end of October, then you're thinking, well, where is a good place to put my order? And it's this red candle here before the price reversed. And what people will do is they'll look at this candle and they'll ladder in on that candle with their orders. And they'll start at the top of the wick, the top of the body, and then maybe fibs all the way down the body, or maybe just 50% at the bottom of the body and then at the bottom of the wick. So they might have 5 orders there: top of the wick, top of the body, halfway through the body, at the bottom of the body, bottom of the wick. Or they may draw a fib extension and take it from the top of the wick to the bottom of the wick, and then the fibs in the body. So all of them, 382, you know, the 5, which isn't a fib, which is halfway, the 618, you know, whatever. And they'll just ladder in their orders on those blocks. And then in the future, when the price comes back, this is where the orders are. And the behavior is that eventually what happens is the price will come back. You see this? And so what has actually happened, potentially, is that the price came in and started filling orders as the price came back into this red candle, and it started filling orders until it couldn't get any further down because there were just too many orders and the price reversed. Yeah. So naturally, if you had laddered in on this candle, not all of your orders would have filled. That's also what's going to happen, depending on how bullish or bearish the price is. But that is naturally a good way of entering limit orders, just looking at the price, seeing where the previous red candles are, and laddering in your orders on those candles. Obviously, the higher the time frame, the stronger the orders. And then, now going forward in time, if the price was to return back down to this level, all of the orders in this block are cleared up to the point where the wick arrived. So you wouldn't then put orders back on the top part of this red candle because it's already been cleared by this candle, which is wicked down in the top part of this red candle. The orders, the untouched orders, will begin underneath this wick all the way down to the bottom of the candle. So basically from this line down to here, this area here. This top part is now cleared. So you wouldn't put orders back where the price has come back to take those orders. You wouldn't put them back in that same position. No, that's not the correct behavior. And so naturally, if the price was ever to come back down, it may come back down through the wick, but then it will start hitting orders as soon as it gets to the bottom of this wick into the rest of this order block. Yeah. And as time passes, and people are looking to enter, you'll start getting more and more orders placed on these higher time frame order blocks as time passes. So right now, someone is looking at the price. They're like, we're like 10 weeks or whatever in. And then they're looking and they're going, well, look, if the price ever does get down here, I'm going to start putting my orders here. They'll start putting orders here. So ideally, in time, you'll get more and more people getting more interested into this token. Then we can like, well, there's going to be more and more orders placed on that lowest order block first. Yeah, there's going to be more demand there as there's more interest in this token. There's no reason why the price is going to return, but you would expect that as time passes in the highs, then if in the future the price was to come back down, it'd be a crap load of orders down there to gobble up the price. And you may get the same kind of behavior where the price can only get down a little bit more before the orders reverse the price. And then the other kind of behavior you will get, and you have to be aware of this, is that eventually with certain kind of places like here, people will front run the price because they definitely want to get filled. And that's when you get a situation where you get higher lows, or when the price wasn't able to go down to take the liquidity below this wick. So for example, in the future, I don't know how the future is going to play out, but let's just say for the sake of this example, the price does go down, God forbid. But I mean, if it does, then it's another opportunity to buy cheap tokens. Not a big deal, but let's not contemplate it for now. You obviously have this liquidity level here with the order block underneath it, where the larger portion of the orders are going to be. But someone is thinking to themselves, wait a minute, I don't really mind getting a slightly higher price just to make sure that my position is filled at those low prices. And so what will happen is they will front run these levels, and you'll get people laddering on the wick instead, the actual wick that leads into the block. Yeah, just because they want to front run the price, just because they want to make sure that they fill. Yeah. And that's when you'll get a situation of potentially, I'm not saying it's going to happen, I don't know what's going to happen, but I'm just giving you this example that the price can come down and it won't actually get past this level because it's just too many orders that are front running the price, because people know that they may never get filled if they just leave their orders here, and so they'll ladder in a bit early. And so as you look back in the price, now I'm looking at the weekly time frame, I'm seeing where the red candles are exposed. So that would be the first place that I would look to place orders. So if you see here, this green candle goes down to this level here, and there's a little bit of this red candle exposed, where the candle hasn't come back down, you're going to find orders there. Then this other part of this red candle is exposed, you're going to find orders here. Now you see in this candle here, this green candle has gone down all the way past this red candle. This is when I talk about swing failures. This is a swing failure where it's cleared all of the orders on that red candle. Yeah. So you wouldn't place an order on that red candle because this green candle has cleared the orders from the red candle. Yeah. And the strongest order blocks, the strongest ones are going to be the ones where the price has actually reversed. So you see here where you have these two red wicks, although this is MEX. I know that candle that was green on the gate, but whatever. This is an example. The price hasn't actually reversed here. It's still going flat to go up. The strongest ones are going to be where the price is going down and then up, like down and then up, where the price is actually reversing. Yeah, these are like continuation order blocks. And actually, so when you look at all the time frames now, so go to the daily now and looking at the previous red candles, starting with the current price action, start where we are now. And people are thinking to themselves, well, where can I place orders? Where's a good place to place an order? Well, if you look at the red candle in the previous price action, the nearest one is this inverse hammer, this red candle here. That would be your first place to place orders on that red candle. And you would ladder it in from the top of the wick to the bottom of it. The best price is obviously the bottom, but you may not fill. And that's the reason why people ladder in, because they want to be filled and they don't mind if the price kind of comes down, fills some of their position and not all of it. They're not too fussed. Yeah. Because they have a best average entry. It's like dollar cost averaging in to the price as the price comes in to the order block. But the strongest level is obviously probably going to be where this flat happens, where the price closes on this daily and it opens on this daily candle. That's and it's called the daily level. So what I would do, and I learned this from somewhere else, it's not I haven't made this up, is I would put a line on that level and I would name it daily because it's on the daily time frame and it has its own color, and that is a level to be defended. And that's also a level where orders will be, the most orders will be on some kind of retracement back down to that level. In the same spirit of the same idea, you're going to have a daily level above us too. So if you see how the price has gone up and reversed, and you have this daily close here and open there, this green candle closes and this red candle opens and the price comes down, you also have an order block there in reverse. So this is a sell block. And so if you were looking to sell, that would be your level, that green candle. Okay, so this is something to bear in mind as well. So effectively what you're doing is you're creating level, the structure is creating levels as new candles are being printed, and you can go back as far as you want. So there's another order block right here, this red candle, the whole candle has been untested, this whole red candle. Yeah, this one here. And you could, there could be orders there. That's where the orders would be. It would be on this inverse red. I like these inverse red hammers because they tell you something. Oh, look, inverse red, inverse red. See, that's an untested daily level, and you would expect there to be orders. And if they're not, that's where you'd place your orders. You'd place your orders here. You'd place your orders here. And as you work your way back in the price, you can see other levels. So there is another daily level, but this has been, the liquidity from this level has been taken. You see the wicks go down. They've cleared the liquidity from that daily level, so you just ignore it. And you have another one here, but you see the liquidity has been taken from that candle, almost all of it, with this wick down. You see that? So it's actually gone into that daily level. The orders have been filled at that price, and the price has gone up. So it's shown very good support at that level. There's a fraction of orders remaining there. So it is a little bit still remaining potentially underneath this wick on this exposed red. And as you work your way back, I can see that they're all being cleared. Even this one, you see how this wick went down. The order block was this red candle here. This was the daily level. The price went into that, cleared all the orders, and it came back up. And so the next untested one lower down is here. And then lower down, it's here. And then lower down, it's here. And then lower down, it's here. And then obviously you can go even further lower down to these areas here, all the way down to the lowest one. So what you end up with are lots of lines, and every single line that I've put here right now is an untested daily level at a place where you would expect people to begin to put their limit orders. These are the best places to put your limit orders, these on the daily time frame, right? And every time frame has this idea. So this is the daily time frame, and the weekly time frame, you're going to find the same idea, but the weekly levels are stronger than the daily levels. Yeah. So looking at this chart, I can tell you that there are weekly levels here. So there's one there. You see that red candle and then that green candle where it closes and then opens, and the price hasn't come back down, so it hasn't gone back to clear the liquidity. So that is your weekly level, and you'd mark it. I have a different color and I have it marked weekly. And so when you get a daily level and a weekly level together, that's even stronger, especially when it's untapped. Yeah. So just bear that in mind. This red weekly candle, see this green one cleared the whole of the weekly candle. And then you have this red candle. So basically underneath this daily candle, no, actually this is cleared too. You see this green candle? So actually the next weekly order block is all the way down here in this red candle here. And actually another strong weekly level, if it was to ever get down here again, would be there. See where this red candle closes, this green candle opens. Actually this whole red candle is the weekly order block, but on the weekly time frame you see the candle has come down to clear almost a third of it already. It's come down to clear it up to there. So this is cleared. So then you have orders down here on the rest of that candle, right? So this gives you an idea of liquidity in the market. Hold on. Oh, I haven't read these messages quickly. Oh my God. Craig Shot Gaming says, I think all arguments between SEC and Coinbase are today, so that could initiate a market move. Huddle Travel. R3A, hello. How are you? I'm well. I'm just going over some things. So, but the before yesterday's red was filled, wasn't it? Yesterday's red. So let me look at the date. Before yesterday, no, this red is still unfilled. So the price hasn't come into this red candle. That's your order block there. Hasn't been touched. At the moment, it looks like it's coming to touch it, but it hasn't been touched. Now, could that be because the price is front run it? Or could it be because the price is still looking to come back down? We don't know. But I just want you to see how the price moves. And at every time frame, you're going to get order blocks. And obviously, the higher the time frame, the stronger the order blocks. I only mark out daily, weekly, monthly, and above. Yeah. But just to give you an indication of the way the structure of the market has formed, it's formed creating a shitload of liquidity levels where orders can be placed without tapping those levels. Yeah, this is really, dare I say it, bullish, but it is bullish because the price is going up without the need of going back down to capture more liquidity. Yeah, and it's going up with volume. If it was going up without volume, then I would be a lot more concerned, like really concerned. Like I would almost expect it to go back down to test. Because it's going up with volume, that's healthy, and that tells me that it is possible that we don't necessarily go down all the way back down to test these liquidity levels, but these are where the levels are. And when I said that it was healthy for us to go up to clear the liquidity, that's what I was saying. I was saying that, look, on the way up, you have a sell, you had a, I'll show you, I'll mark them all out so you see how much liquidity has been taken on the way up. So there's a daily level there, there's a daily level there. This whole green candle, and this one is a sell block. Yeah, I'm not marking it now, just telling you where they are. And that, you see this daily level, it's been tapped, but the exposed, you see the exposed green candle here, this exposed green candle, that's the remainder of the order block. So it's still, even though the daily level has been taken, that's where most of the orders would be. There's still orders there potentially. Now, I'm not saying that people are that smart and they're placing their orders at these levels, but when the price moves, this is how the price moves. It doesn't really matter. Now, maybe it's just the computer bots that are doing this. I don't know. I'm just showing you how it works. So there's another daily level. There's another daily level. And you have the remainder of that wick all the way up to that top level, which I don't mark that as daily. I always mark these as swing failures. So liquidity levels at the highs. Basically, technically, they're sell stops. I have a mark for it, sell stops, but I'll just press F. Yeah, you see sell stops. And so when you look at the way the price moved up, you see that it went through 1, 2 daily levels, but it still hasn't been able to reach these levels higher up. And on different charts, it's slightly different. So like on MEX, it went all the way up to here, and on other charts, it went all the way up elsewhere. But then also when you look at the weekly levels, you can see that on MEX, these 2 daily levels also correspond to a weekly level. So that was quite a strong level, and I did mark that out in previous analysis. And you'd think that that's bad, but it's not bad. It's just you have to clear the liquidity. So these wicks that go up is clearing previous liquidities so that the next time it goes up, there's less resistance, because now the liquidity is cleared. There's no more sell orders preventing the price from going up. And then the next weekly level is up here with the daily level. Now, usually when they're together, I just leave the higher time frame one and get rid of the daily one. And just generally, the weekly ones are going to be more resistant or stronger levels than the daily ones. And obviously these ones, now that they're washed, even though they may still be relevant, they're less relevant. So you would probably just ignore them, unless in the future you saw the price started to still react off them, and then maybe you would put them back. And so that's kind of where we're at now in terms of the daily and the weekly levels. And then obviously you can do exactly the same thing with the monthly time frame. Now look, so this is quite interesting. So we have a monthly time frame. We have a level down here with all of these dailies. This is untapped. And you could probably just remove all of these dailies, just have the monthly. The monthly is really strong. And when you're looking at these candles, you can actually see that this monthly red candle has not been cleared at all. So if you were to put orders, you could put it on the whole of this red candle. This is the monthly time frame. I don't know if the price is going to come back. I can't tell you if it is or if it isn't, but I do know that's the best place to buy is this red candle on the monthly time frame. Yeah, it's just the way it works. And in the future, if the price moves up and we do get another red candle followed by another green candle somehow, then you'd form a new monthly level higher up, and then that would be your nearest closest monthly time frame order block closest to the price as the price continues to move up. So that's why as you create these kind of candles, these red and green candles and structure, it's very kind of bullish. And that's kind of what we want to do. We want to create that because it allows for people to be able to place orders, limit orders. So that's the monthlies. And obviously on the way up, you have this. So this is interesting. So I actually think possibly that this monthly level has been tapped already. So you would expect it to be quite a strong level here. But I think you could, even though you can look at this candle and say, well, it hasn't quite reached it, I would consider that reached. Yeah, I would consider that a tapped level, a washed level. But obviously as you go higher up, you can clearly see that there's one up there. That's a monthly. And then obviously in the highest place, all the way up there. You see that? And that's how you can chart your charts and create the levels. And you can actually, so let me just put all of this stuff into, what I do is I put these all into a group. I call it, rename higher time frame levels. And then what you can do is, let's say you want to start just laddering in on the daily time frame. Bro, please look at Gary Token. It's a great project. Bro, your subscriber base will increase if you read comments on live chat ASAP. It will help you a lot. All right, I'll bear that in mind. You want me to have a look at Gary? I'll have a look at Gary in a second. Okay. Let me just finish this. So people are looking to enter and they don't know where to enter. Well, based on what I'm saying, looking at these previous red candles on the time frame that you're looking at are the places to enter for longs, and then obviously the places to enter for dare I say shorts, but sells would be previous green candles. So you see how the price came up to create this green candle. It came back down. As the price comes back up, it finds resistance back in the candle, because that's where you would place your orders. Yeah. And maybe I need to explain this again, or maybe I need to explain this live. I don't know, as it's happening. But right now, like and every time frame has its own kind of candles. But when you see like expansive moves, so let me go to the 5-minute time frame. Let's say on this really expansive move, we were looking to catch it. Rather than buy the pump, what you see is as the price goes up, you form red candles. Yeah. See that? And so naturally, the best place to enter your orders are these red candles. As the price comes down, it comes back in, it finds support on these red candles to go back up. Like when you want to place limit orders, as the price is moving, look at the previous candles, and that's where you would want to place your limit orders, on these red candles, so that when the price comes down, if it finds enough limit orders, it will go back up. Yeah. Obviously this didn't continue, and it's really liquid, so that's why it's very difficult to, you know, to give it. On Bitcoin it's a lot easier to show. So maybe what I'll do, I'll show on Bitcoin one day. All right, so I think what you want to do is bear that in mind. Don't miss out on the FOMO. The FOMO is going to come in the highs. The higher it gets, the more FOMO people will have, because here I am now where the price is at 4 point something, telling people this is a good buy, and you know, this is the strategy and these are the levels, and like just basically laying it out for people. People don't really have to do any work. They can just look at my charts and go, okay, I get it now. And then, but they won't act. And then one day in the future, the price of TRVL is going to be like 40 cents. And then they're going to be thinking, so, well, this guy's actually been saying that it's going up to $23.50, or maybe I should buy some. That's what's going to happen. You'll see. So just wait for it. Gary, R3A, are you still here? Gary token. No idea what Gary is. World's largest Web3 audio and video live streaming platform. Oh wow, there's a lot of users, 125,000. Solana, of course, is bullish. Yeah, it's nice. Real estate tokenization. Upside, I don't know, real estate tokenization. This says it's a creative token. I've done something wrong, haven't I? The DXY came from a 0% to 0.7% growth in the last hour. Some people believe the dollar will go from 103 to 105 to 106 soon. 200 million yields. Oh, and the Apple says so. Is it this one, the Gary Network? Solana? Yeah, it must be. 200 million users. Right. It must be this one. Huh? Market cap's quite good, huh? 9 million. Good volume, man. Look at that volume. Just having a look at this and seeing what people say. What's the token? Yeah. Top 10 projects with market capitalization under 10 million. As promised, we'll burn a percentage of revenues earned in Gary. Gary. I don't like the name though. Next moon coin. Democratized. I think, you know, like if I would actually, I think I need to go and use it. Who's this guy? Sumit Ghosh. Oh, it's got a lot of downloads, huh? 4.5 star reviews. What is that, Chin Gary? Best app for short video. Too many issues every time. I don't know. Too much glitch. Totally fraud app. I am listed on the Star Media Agency. Now when it comes to providing salary, the owner is not responsible for shots. Terrible app, slow, buggy. It's not what you want to see, huh? This is a real, like, look at this. Like, I know I'm not even looking at the token right now, but they need to fix this. And I don't like their responses. They're not personal enough for me. I hate that. Just respond to people. Don't just copy and paste this rubbish. Like, get some real feedback. But anyway, it's just an observation. I'm not like saying it's bad. I just think if this was my business, that's not how I would respond to my customers. Do you know what I mean? January the 20th, 2020. So it launched at like quite high and then it dropped. I don't know what this is. It went back up and then it dropped again. I don't understand that. What markets is it on? MEX, KuCoin. Let me have a KuCoin and Gate. What is this? MEX, KuCoin and Gate. Don't understand why the price, is that January? They're all January. I don't understand how the price went back up on his and it hasn't on that. Is this the right token? B is asking, do you have a proof that they got 100 million downloads? Kraken Venture invested in it this month, apparently. I don't understand this. Like, it doesn't show on the charts. So where did they get this from? Let me have a look at the other coin market. See, the same thing, huh? So basically it's saying that in April 22 it went up all the way up to 82 cents. Oh, maybe it did. Okay, now I understand it. It's I'm looking at a different time frame. All right, that makes sense. Which has the most volume? HTX, OKX. I'll go with OKX. Which one was that? Okay, so I have the right chart. Oh, look at that. That looks like a... What is that bullshit? I hate that. Look at that volume out. That's terrible. I don't like that at all. I'm just telling you how I feel when I see this. I'm not like saying it's good or bad, but for me, it's not good. I hate that. I hate that. I'm not saying this isn't going to go to the moon. I'm just saying I hate this behavior. Look, the price launched at 20 cents, right? It got to an all-time high of, I don't know if that's the all-time high. No, that was the launch high. The all-time high is probably this candle here. Is it $1? See what it says. Let me see what it says. Yeah, $1.05. So let me just make this white. This is $1.05. This is a little bit lower. Let's just go with that actual. Let's just go with this candle. It's about the same. So that's your all-time high. And your all-time low. Excuse me. Is this figure? Let me see what that is. Is that this one down here? Yeah, thereabouts. It's fine. We'll just go with this. It's fine. It's no big deal. All right. So these are your levels. I'll rename that to launch price. Okay, are you with me? Are you still there? Good. So this is the market psychology. They launched in 22. And then it dropped. And it dropped to really high volume. Yeah, you see that volume? So it doesn't look like they took crazy profit in the launch. They took a little bit of profit in that candle there. That was a profit candle. See this? See the increased red volume? There was a bit of a profit take there. But actually all of the value was taken in that candle. And I'm not just talking about a little bit of value, I'm talking about all of it. So any single person who bought in this whole range was literally screwed by the developers. Yeah, by the team, by whoever sold. Everyone was caught off guard and they were destroyed by that, by the team. That's what this is. And they didn't even defend the launch price. They weren't even interested in the launch price to hold the price up. And that's common behavior, but not like this. This is like a vigorous assault on the price. That's like no confidence at all in their own project. Yeah, there wasn't even an attempt to buy back in at the launch price, right? That's what this says. This is what the chart is saying to me, right? As an investor, why would I invest in this? Because if they have the capability of doing that once, it can happen again. Now, fine, all right, we're at the lows and maybe I could make a bit of money on the way up. And I'm not disputing that. And I'm going to analyze the charts for you right now to tell you whether it's bullish or not. But I would never invest in this just because of that. Like, why would I ever bother? I don't care how good the project is. This behavior is unacceptable in my mind, and I don't want to participate in any project that involves that kind of misdemeanor, that kind of behavior. They didn't defend their own coin. There's so many coins out there you can make money. So many coins out there that have decent people, decent projects. You know, they need to explain themselves. Yeah. And all these people who are buying for whatever reason during this consolidation period was screwed. But that was like a rug pull. Unacceptable. I'm sorry, but that's how I feel. And I'm going to analyze the charts for you right now. Look, the point of control is in the high of that range, because whoever they're taking their profits. These guys are just taking their profits. They use the exchange to raise money from all of these investors on the full hope of false promises before they got screwed, basically. And they're all underwater, probably still holding on to their positions, probably because they've taken such a detrimental loss in value. Or actually there's a big sell-off, so a bunch of people sold, but you're looking at a reduction in value of 100% almost. You know, if you bought $1,000, you're screwed, literally. Look how far down it went, because as a result of that behavior. And that's really high volume, and there was no interest until September. And so this tells you that probably the same people are scaling back in, the same people. So now they've got a much better position in their own project with a view to doing exactly the same thing. Exactly the same thing. Yeah. Why wouldn't they do the same thing? They didn't defend the price. They didn't accumulate in any meaningful way in these lows, in these pushes down. So this is this is not a good. I wouldn't. Yeah, I'd be very concerned about this, right? I don't know if you're involved, but if you are, I don't know. Anyway, I'm just telling you how I see it. yeah, you have an increase in volume at this range. You're at the point of controllers here. So obviously more volume has come in at the lows. You have high volume up there. You have high volume down here. The value area is here. As you can see, I'll do a fib pull from the top to the bottom. Just do a rough fib pull. So the golden pocket comes at the launch price, which is almost expected. The 50% comes at the value area high. You're in the lower half of the range. From here back to the all-time high, from where we are now, we're looking at a 28x increase in value. But honestly, I think a lot of people looking in this chart, if they have any kind of knowledge of technical analysis, would probably avoid this until it started to get back above certain key levels. And even then, I think the danger here is what I said. You've got this accumulation in the lows, probably by the same people. And if they hodl all the way up to there, then you're going to get the same behavior. Yeah. So you basically, what you'd have to do is you have to take your profit before that happens. Yeah. And it's a little bit of a scam, to be honest with you. It's a little bit dodgy. There's a lot of significant levels to cross. If anyone is in, I think obviously it's going to be very difficult to cross this area here, up here, just simply because you might have people who are still holding, and as soon as the price comes up to break even, they're just going to exit. There's no point for them holding after the price has gone up 64x. They're not expecting for more, and so you're naturally going to get big resistance up into these areas. And then for anyone who's trading, they're not going to hold beyond this resistance level up here. The problem is you've put volume in the highs. Yeah, it's very different to TRVL, where there's no volume in the highs. Yeah, you've put a lot of volume in the highs and the price has been rugged. So naturally, that's a place it's going to be very difficult to cross into this area. I think very difficult, especially after an extent. If it goes up from here to here, you're looking at this is already a 10x. I think for most people, they won't take the risk. They will start taking their profit. And actually, looking at this chart now, I wouldn't even take the risk of getting past into the previous above the launch price. The launch price was clearly untested, and it didn't hold the support. So I think, and it's now the golden pocket is coinciding with the launch price. So I think that's easily going to offer resistance once, twice, and it probably won't even get there the third time because of this kind of action. Like, you know, it's not healthy. No, and I think it might even struggle. I don't know, because, and this is the thing, you have to look at the way the volume, is the volume increasing? Let me have a look for you. This big volume here is very concerning, just FYI. The charts don't lie. That's what David says. Let's test these lows, huh? I want these lows tested. That's what I always say. Test the lows. Let's see what happens. I don't like, this isn't enough test for me. I mean, you have a little bit of volume. This monthly candle, you got a little bit of volume at these lows. So I can't say that this is, on the monthly time frame, the volume is reducing. It started in September and you have a little bit of a reduction in volume with an increase in price. A little bit of bearish divergence there, but that could play out in so many ways. You have a bit of bearish divergence, to be honest with you. On the CCI and the weekly chart, there's bearish divergences right now forming at the highs. See, look, higher high, lower high. You're getting bearish divergences on the indicators. So I think because we haven't really expanded so far, I think naturally the next place to enter will be this red line. If you're looking to enter, I don't know if you are. I think that would be the safest place to enter because it's the point of control. And that's, if you're looking to accumulate for the long term, I think that's the safest place to get involved. Like, I don't know if I'd be interested unless the price got back to that point. And actually, personally, I would like to see the price go further down and shake out. Like, let's see how, I want to see these, like, I want to see these people go who are long feel a little bit of pressure to see if they rug pull again. Do you know what I mean? Like, or I want to see them take significant profit before I enter. I don't want to come in on the back of people who have the potential to rug pull a project without either them feeling a little bit of pressure or defending the price, or for them to see them take significant profit. So maybe, and then if they were to take significant profit, you'd want to see like a decreasing volume without the price moving down so much. You wouldn't want to see, like, what if the price goes up here and then you see another red candle like that, like this? What then? I don't think that's fair on people who are investing. So I don't really like the price action, to be honest with you. I think I would, I think when you have like tokens like TRVL, why would you even bother with this? That's the honest answer. Is it going to revolutionize their industry? It might. Is it going to be the next big thing? It could. Is it a gamble? Yeah, it's a big gamble. Could it succeed? In the context of Bitcoin, a lot of gambles are going to pay off, but then you're not going to be investing much. You're just going to, it's going to be like it's like a bet. It's like a $10 bet. You don't care about the bet. Just bet. You know, it's like buying a lottery ticket. You know you're going to lose, just in case. That's the kind of speculation I would probably think about with this. As a trade, well, look, let's just look at it technically, right? You either want to enter lower or you want to enter on a sign of strength, right? Increasing volume at the lows. Yeah, there's a little bit of strength here in terms of volume. That's true. This is what I would want, right? Like, this is the kind of price behavior that I would like to see first before. Yeah. I'll show you. And I'm not even going to put an alert because I'm not interested. Sorry, but I think you want to see these lows taken out here. I want to see us lose this point of control. And I want to see if these people who have longed exit and start selling. Do you know what I mean? I want to see, what I really want to see is all of these people who are long, whether they panic sell once they're underwater. I want to see these longs come under pressure a little bit. Does that make sense? And I wouldn't mind if we go all the way down one more time. I just want to see a little bit of pressure to see if these people are going to keep on buying, or if they're just going to be done with this, like it's not worth the risk. Or, you know, I want to see how people react, because at the moment they're looking at this candle and it doesn't look good. And already, like, if these people are long, I mean, they're not in crazy profit, but they're already from the lows to where we are now, you know, already 2.5x up on their investment, you know, maybe a 1x up on their investment. And it's a bit of a concern, huh? You know, you want to see them under pressure. You want to see some kind of higher time frame. I think that's what you want to see. You kind of want to see a longer accumulation at the lows, and or you want to see some kind of, let's go down and spring again, you know. And the other thing you have to bear in mind is market structure. Let me see market structure. That's the lower low. Lower high. This is your lower low. Your lower high. Yeah, maybe you've changed it. Maybe that's the high high. And that's the lower low. But then if we lose it, then we're making a lower low again. Then that becomes your higher low. Then you have to make a higher high to make a higher low. Like I think I want to see this price extend a little bit further. I wouldn't be confident if it started pumping. And then the other thing you have to bear in mind is no, just I think the best entry actually is down here. Right at the bottom. Let's SFP the low and come up. And if it doesn't happen, then no big deal. In terms of risk versus reward, what am I doing? It's the best entry. That would make sense. Yeah, I mean, your R3O is saying you only bought because of the user base 200 million. If each, but I mean, you are talking about. He's saying that imagine if each person spends $1 in the app, the revenues will increase, the coin will pump. Look, the $1 you're talking about India. I don't know if not everyone's going to spend $1. Let's be honest. Most people won't spend at all. Most people, you're not being realistic. Most people aren't going to spend. And actually, looking at the reviews on the app, most people are just going to download it, install it, and then never use it again. And it'll just be another app in their phone. Let's just be honest about what people, the use case here. And then a lot of these people, they're not necessarily wealthy people. So, you know, and unless it gets into the broader market, the worldwide market, Who knows, you know? And then when you in a world where you have like TikTok and Instagram, Facebook and all these, you know, YouTube and whatever, I'm not like, I'm not really seeing it. Like, I don't see it the way you see it. So I think if in terms of a trade, I think if you come and come back into this low one more time, yeah, I'd be interested. But I'm not really interested right now because I don't like this behavior. I just think it's too risky personally. And I think there's a lot of better trades out there. And they really like, they really need to explain themselves. You have a natural resistance level here. So if you are going to take profit, don't take most of it before you get to the golden pocket. Yeah. And actually, I think much lower. I think here at the 50%. Yeah. At about 9 cents, 9.5 cents. So you're possibly from where we are now, you're looking at a 3x. But it's not worth the risk for someone who's a new entrant right now, just because you have levels of resistance that are above us that are untested. And it's very possible that these longs take significant profit just like they did before and pull the price down all the way back down. And that's actually really where you want to get involved. After you see that behavior, like if we see this price go up, I'd rather the price go up to see this profit take, the crazy profit take like we experienced here, for the price to go down and then hold here. So you're making kind of like a higher low. So you know that all of the profit's being extracted, and then you get a better risk to reward ratio on your trade, potentially forming some kind of double bottoms type thing. And actually, why not take the low? Why not go for a new low? You know, why make a higher low? Why not make a lower low? Why, you know, there's no reason why. So yeah, so this is what I'm kind of contemplating, but I don't necessarily think this could play out that way. It could very easily do this, but there's not enough risk to reward to make that trade worthwhile, just simply because you have major levels of resistance close. So even if you were to enter at the point of control, to get to the 50% is only a 3x. To get to the golden pocket is a little bit better at the 6.5x. But these are really strong levels of resistance. I don't necessarily think that the price is going to easily get to the other side of the 50% or even back into the upper range. Yeah, I think the price is going to struggle, even with the kind of volume that you're talking about, the kind of interest. The reality is that this candle will scare people, you know. So naturally, the bottom of this candle is going to offer resistance, and that is at the 50% mark. This is probably the rest of the bull market, potentially. Like, don't think that just because Bitcoin is running that all these coins are going to run. It's not going to happen. Like, it's not the way it works. And so you have to be careful. Oh, it's Philippines, biggest item. Yeah. You're saying it's not India, it's Philippines. All right, fair enough. But I'm not kind of judging or being kind of discriminatory about that. I'm just saying that they haven't. I don't know if they have a large amount of money due to the anti-China policy. So this looks like a rug pull to me. Like, and I'm surprised. I'm surprised that these exchanges allow that behavior. To be honest with you, because it's not really good for their users to allow this to happen. But it is what it is. It's the free market, isn't it? And let me just, I just want to search and see Gary USD. Let me see if anyone wrote about it. The Gary token was designed to help Indian creators monetize their content via the short video application, the Chingari. Lost over 30% of its value in a few hours on Monday. While the network dismissed this development as a market event, investors believe it to be a rug pull. See that? The token was launched by a Bollywood A-lister, Salman Khan, to help creators monetize. See that? Investors are urging the public to be careful and do your own research while investing in the crypto market. Yeah, you see that? The investors got screwed. Let's see what this guy says. Welcome to another crazy bear market in crypto. Gary token was planned to be a utility token for a short video app named Chingari and the token of the NFT market. In terms of marketing, the team paid a decent amount of money for several crypto influencers. See that? They paid for the marketing. That's where the value came in. The token lost 93% in 5 minutes without any reason. Without any reason. Initially, it was thought that it was a case of a hack. However, it was purely a market event. See that? No, it's rubbish. It's not a KuCoin. I don't believe that. So, just like I what happened? Shit. I didn't have to look at the news to tell you what happened. I looked at the charts and I told you what happened. Yeah, the charts don't lie. That's a rug pull. The investors got screwed and someone took all of their value out of this. And why is all of a sudden the value coming back in? September, not even October. It's coming back in September, slightly earlier. So it's literally because someone is getting ready for the bull run, the October or whatever. Someone is positioning themselves in for the Bitcoin hype, the Bitcoin mania. They're going to market the hell out of this. They're going to make a shitload of value because people are unfortunately going to buy into this, dreaming of a rich future. And they may be able to sell the story because back to the all-time high, you're looking at, from here, you're looking at a 30x. They could sell that. They could pay some really influential crypto influencers or just normal influencers, and they can get the mass public hysteric about this token, and they'll do exactly the same thing. Exactly the same thing. So I wouldn't touch this, honestly. Just avoid this. Just forget about it. Just buy TRVL. Like that's my solution. Oh, it's down a little bit, huh? Good. Better prices. You see, you should have seen some kind of defense of the launch price. Yeah. You didn't see that. There was no defense. This is not a rug pull chart. This is a healthy chart. And now we got some volume coming in. This is healthy volume. It isn't right at the lows. It wasn't planned. You see what I'm saying? It wasn't like someone was like planning this. And so naturally in September, they were like, they were thinking, okay, now let's buy in because we sold out. And now is the time because we want to rug pull people. This is just health. This is just a healthy chart. It's a naturally corresponds to the growth of the market and the project and everything else. Like, this is what you want to be involved in. And then also, you know, like, I'm keeping the team in check. I'm making sure that they do the right things, and I know them personally because I've got to know them. And the first thing I asked Eric is, can this project be rug pulled? And he said to me that he wouldn't be involved if it could. So they've created the system, the security, so that it can't even be rug pulled. It's not possible. I don't know the technical details. You can ask if you want and find out, but I think that's a precondition for a lot of these people who are involved. And obviously then everything else that I've seen corresponds to the legitimacy of what they've said, of the statement of their intent. There's no rug pull here. You can see it clearly in the charts. It's a very different looking chart. It's a very organic, forming, healthy chart. Very different. And you see the high volumes of the greens, not the reds. That's what you want to be seeing in charts. You don't want to see high volume reds. You want to see high volume greens. So just bear that in mind. Yeah. Well, I don't know about Kraken Venture, honestly. Like, yeah, it could be. Yeah, Kraken Venture. What's Kraken Venture? Let me have a look. Well, you know, Kraken Ventures are going to be investing in hundreds of projects. Do you know what I mean? So what? 90% of them are going to go bust, maybe more. Only 1 or 2 of them are going to do well, and that's where they're going to make most of their money. Doesn't mean anything. Yeah, literally doesn't mean. Maybe, you know, maybe they just took a gamble because they knew the bull market was coming, and this is like a, you know, who knows? They're buying the lows. It's little, and these guys are high risk investors. You know, they're not. They might take the risk. They have a shitload of money. They're not like you and me. You know, like, we can't afford to lose. These guys, that's part of their business model, to lose. You know. They're looking to lose most of these, and then they only need 1 win. And so they've invested in a ton of stuff. But they're not that smart either. Like, I don't respect Kraken Ventures because that was clearly a rug pull and then they still invested in it. Why would they do that? That's rubbish. They should avoid them. But that's what it is. You know, greed is greed. And the endless pursuit of making money at other people's expense is just not, it's not on, you know. It's not. I don't like that behavior. Yeah, so I don't know, I just think thank you for showing it to me. I'll post it up and then people can make up their own mind, and it is what it is, you know. And if they disagree with that, fine, you know, we live in a free world. People have their own opinions. Based on the charts, it looks like a rug pull. Explain. This isn't a market event. What is a market event? A market event, bro, someone just sold all of their tokens instantly. That's not a market event. That's a who is that person with all of those tokens? How many tokens were sold? Basically, someone sold. Look, the trading volume is 80,000, 100,000, 200, and then suddenly 209 million tokens are sold. Yeah, who had all those tokens? That's not a market event. You gave someone all of the tokens and he sold at the highs without even flinching, and then he sold all the way below the launch price So we just waited for the high. Why did he sell? Let me tell you why he sold. Like, he didn't even wait. Hold on. Oh, there. This is it. Like, technically, why did you sell? And he didn't like scale out. Like, the logical thing, the smart thing would be to just to set limit orders in this range, and it would just happen naturally. Yeah. But this is called greed, because the person was waiting to see how high it could get, thinking that maybe it could get higher to do exactly the same thing. There was never an intention to hold on. This intent was always there. And look, let me look at the volume chart. Why did they sell right up to that candle? Well, unfortunately, you lost the value area high. So technically it was the correct thing to do. It's just that the guy had all of the tokens, and they sold it all. They sold the whole lot. And what would have been better, like, is to sell into this high here, but they weren't interested in doing it correctly, and then like scaling out. What would have been better is just to sell little bits over a large period of time, but they weren't interested in doing it correctly. They were just trying to just get out. And actually, if they would have done that, they would have probably walked away with a lot more value, because here in the sell, you know, they would have probably got much lower in terms of the average sell price, maybe 20 cents or 30 cents, or maybe even, look, a lot of the volumes at the bottom. So and the other thing they have to understand, and this is what I'm saying, yeah, in order to sell all of those tokens, we're talking about 209 million. You also need 209 million tokens to be bought, right? So in this whole range, you had all these people who had set limit orders because they've been promised a great future, and basically all of a sudden everyone who had placed limit orders found themselves instantly underwater, and this guy is bone dry because he's walked away with profit. All of these people now are running away because they're all underwater, and they're just closing their positions at a loss. That's what this is. This guy is fine, you know, he sold. He probably got most of his position at the launch price. He probably got out above the launch price, probably halfway. He probably made a 2x or 1x on his investment. And if he was smart, and he wasn't, he would have just scaled out in this range, and then the price would have just done its own thing anyway. You wouldn't see this kind of rug pull. You might, and you probably would have seen low prices, but it would have been a different looking chart. So yeah, that's the problem here. Real problem. I would avoid it. Just avoid. X fund. Listen, mate, I don't have time right now to do X fund. I'll have a quick look. I'm obsessed. Don't really have time. I got to do some stuff. Uniswapper. I can't see a USD pair. It's all. Oh, is that USD? Let me see these two. They're both Ethereum. Wrapped Ether. USD. Okay. Low market cap. It says it was launched in 21, so it got the bull run. went up to $8,000 roughly. Doesn't have the price here for $8,000. Can't see the volume. Yeah, can't see that volume. So let's have a look at all of them. This is wrapped ether. It's one of these two, huh? One of these two. I don't know which one is the right one. This is wrapped ether as well, though. But it's the same. No. This is wrapped ether in USD. I don't really know which chart to use. Unless you can tell me. Physical training place in Dubai. I don't know if there's any point in charting this, to be honest with you, because I don't have all the volume, and it's not in any major exchange. So it's highly speculative. Just on this small chart that I can tell you that this point of control being at the highs is a problem. Yeah, do you see that point of control being in the highs? That's very problematic for me. The idea of that is problematic. So, and also, I think until you start seeing some real volume put in at the lows, which we're not seeing right now. Yeah, do you see there's no volume? Then it's not a good sign. Yeah, and part of the way what you want to see is more volume in terms of the quantity of volume, or volume to push the price up. So volume up, volume, and I'm not seeing any of that. I'm not seeing either of that. And actually this this green's decreasing volume, increasing price. It's not healthy at the moment. So you're probably looking at a longer term accumulation. At the very least, what you want is you want this point of control to come down here instead of being up there, somewhere in the lows. That's the first thing I'll be looking for. And then I'll be looking for volume. And even still, you're gonna get up here to come back down. You know, like, just bear that in mind. So it might be better for the point of control to come down here, for the price to work its way up to this high volume node, which is that's what it will become, to come back down. Then if you are looking to enter, and this is how it plays out, then you enter on the golden pocket, which will probably, hopefully, land in the same place as the point of control sometime in the future to go up. Then that would be your trade. But until you saw something like that happen, again, it's just pure speculation, hopium at best. But it's not like a proper trade with a proper trade plan, something like that, or up to the highs, wherever, however, like, this is a proper trade. But you have to wait for a few things to happen. And look, this even looks like a head, an inverse head and shoulders. That's kind of what you want. You kind of want it to go up, and then you want the volume to come in here to bring this red line down, so that most of the volume is in the lows. And then obviously then you're looking for a neckline break, back test to go up. Something like that would be what you're looking for. And so you can just monitor that. This is going to play out. This is going to take a little bit of time. I don't think I would rush into this at the moment. Right? Does that help? I'm not even looking at the project. You just need some things to happen first before you kind of look to accumulate or enter. If this goes up and comes back into the golden pocket, point of control in the lows, yeah, then you could take a trade. So you could start accumulating with the view of it going up, and you may time it right, because then it'll be next year. You know, Bitcoin might be in the highs. Then people are speculating on these small market cap coins on Uniswap, and then if you see a circumstance where it is behaving like this, then you could then think, okay, this is going according to my plan. So the next part of the plan is the trades, and at least you have an invalidation, because you're then not really expecting it to go down. By then you're expecting it at the very least to go up. You could then take your profit at the point of, or the point of control hopefully is at the lows. So at the high volume node, you could take profit there, and then maybe try and see how far it goes, if it can go up to the all-time high. But then obviously there's going to be a golden pocket from the all-time high to the all-time low. So the all-time high is something, don't know what it is, $10,139. So let me just draw that out quickly for you. 10,900, and I just do it roughly. It's not a big deal. So just do a fib extension from the all-time high to the low, and that's your target. Like don't overdo it. Just go into the golden pocket, and that's really your trade. All right. I hope you had fun listening to me go on. And I'll see you guys tomorrow. Yeah, I mean, low supply is good, but a lot of interest. You need interest, you know, like it isn't just about the supply, it's also about the interest. And you obviously have some volume levels that you have to contend with, and if you don't have the interest, then you're not going to get past those levels. All right, take care. Hope you have a good day. See ya.